Achievers Lanka Business School was established in 2006, bringing together 5 leading lecturers in the SEMA industry with a vision of directly contributing to the corporate world by attracting high-caliber students and molding them to be outstanding professionals. Achievers, an approved SEMA Learning Quality Partner, is an accredited center for SEMA exams and provides facilities for classroom learning and independent and group studies. With an annual intake of 6,000 students, Achievers is a leading institute for SEMA in Sri Lanka. We attract the brightest and the best and guide them to unleash their potential. We are passionate about transforming lives and achieving aspirations. Achievers won Asia's Best Business School Leadership Award in 2010 and 2012 and a Silver Award at the Slim Brand Excellence Awards in 2012. At Achievers, we go beyond providing a mere qualification for our students. We give prominence to personality development. We provide a platform for our students to take part in activities outside the classroom so that they are well groomed to enter the corporate world with an all-round personality. We are the first and only SEMA Business School to have set up a Rotaract Club and a Leo Club, both of which have prospered and gone from strength to strength in the last few years by organizing successful projects. Our students grab the future. They make a difference because success stories don't just happen. They all start somewhere. Achievers, where the good becomes great.
I'm Nidula Elgirivithana, Deputy Head Prefect of Ananda College. I have chosen the path of higher studies in the field of information technology. To elevate my career growth and to extend my extra qualifications, I have decided to do ACCA at Achievers Institute. So with online classes, we don't need to attend lectures physically. We can stay at home and study. Also, the classes they provide are truly high standard and I really enjoy the classes at Achievers online. I highly recommend Achievers for your education.
Achievers, where the good becomes great.
Hi, my name is Hashan Hettigara and I'm a past head prefect of Royal College and I'm currently pursuing my undergraduate degree in mechanical engineering. Having been a prefect, it was hard to manage time to do anything else. But due to the fast-track course offered by Achievers, I was able to complete my ACCA knowledge within just 3 months. And this enabled me to hopefully finish my ACCA qualification within just 1 year and 9 months. And this was not just because of the effort that I should put in, but this is due to the help and support given by the lecture panel who maintain the highest pass rates and the highest number of world ranks within Sri Lanka. They offer one-to-one support or anything else that you require at any time. So if you are planning on joining ACCA or SEMA, I do recommend that you join Achievers.
Achievers, where the good becomes great.
Hi, I'm Teshani. I was Island first at the 2019 A-level exam from the Commerce stream. After my A-levels, I chose to study ACCA because it's respected globally and well recognized and sought after by many employers around the world. Also, the knowledge and skills provided by ACCA are very relevant and practical to today's ever-changing business world. I'm currently studying ACCA at Achievers, and something I realized while studying at Achievers is that the lecturers are fantastic and they genuinely care about their students and help them reach their potential. Also, the classrooms are very interactive and lecturers even take time to provide one-on-one support to their students. QBR sessions and the revision classes before exams are very effective and well tailored to bring out the best in you and also increase your confidence before your exam. At Achievers, you can also get a lot of flexible options like studying part-time, full-time, or even studying online, which I think is very convenient as a student. So I would like to recommend studying ACCA at Achievers to any student who aspire to become a professional accountant.
Achievers, where good becomes great.
My name is Druinga Pereira and I'm currently serving duties as the Deputy Head Prefect of Sports at Royal College. So right after A-levels, I decided to study ACCA and I'm currently in the second stage now. Well, with my prefectship and work, of course, I couldn't attend classes properly, but however, I was able to study everything properly without any issue because at Achievers, there is a proper system to provide the recorded lessons to the students who miss classes. And also, even after watching the videos, if there are any issues, any doubts to be clarified, lecturers will always be there to give one-to-one support. And also, having the option of attending classes physically or online is something really great because I don't have to go to kids every day, and whereas there were some certain days where I used to study at home. So all in all, I'm really glad to have chosen Achievers to study ACCA.
Achievers, where good becomes great.
Hi, I'm Sandy Mudan Naik, a 19-year-old TV presenter, voice artist and an ACCA affiliate. I started off my ACCA right after O-levels at Achievers. Initially, I thought of ACCA as a very difficult qualification, but later realized that it is not. It is a globally recognized professional qualification that you could do right after O-levels, because I did it. I did not just participate in ACCA related activities, but also did many other things. I was an interactor as well as a road tractor. I did my A-levels as well as started off my career as a media presenter. So you see, you just do not need to be focused in one area when you do ACCA. The best part about ACCA is the tuition provision. Achievers made ACCA very easy for me. They have a specific program called the Pro Teens Program, Professional Teenagers. Now this program helps us right after O-levels to understand the way of ACCA, eases us into a professional qualification. This helps us break our mindset from being normal teenagers who are just after O-levels to being teenagers who are very professional. And the best part about Achievers is that it's fun, the lecturers are awesome, and it's all in all friendly. If you are right after O-levels, confused about what you're supposed to do, I would recommend ACCA at Achievers.
Achievers, where good becomes great.
Good evening, everyone. I'm responsible for hosting this webinar today, and it is a moment of extreme pleasure to welcome you all to the second day of Ginum Karune Tirthayatrava Nanasa Accounting Webinar, organized by Achievers, the largest college in Sri Lanka for ACCA and CIMA. On behalf of the institution, I offer my regards to the principals of respective schools and the teachers for coordinating you to make this event a success. Also, I take this opportunity to convey my warm regards to Mr. Chaturanga Sandaruwan, Senior Lecturer of the Department of Accounting, Faculty of Management Studies and Commerce, University of Sri Jayawardhanapura. It is such an honor to have you with us today, sir. Thank you very much for joining and bestowing us with your presence. Also, I welcome all the students who are taking part on this event today. I think this is the best time to give you all a brief introduction on who we are and what we do. Achievers is the largest college in Sri Lanka for ACCA and CIMA. ACCA enables you to become a chartered certified accountant by doing ACCA with Achievers. You can get a BSc degree in applied accounting awarded by Oxford Brookes University by only doing the final project. This is a fantastic opportunity for you to get a professional qualification as well as an academic qualification at the same time. CIMA, as you all know, is a world-recognized professional qualification awarded by the Chartered Institute of Management Accountants. At Achievers, we go beyond providing a mere qualification for students. Our vision is to equip students with the necessary skills to excel the corporate world while attaining success at the exams. Achievers received the Best Business School Leadership Award at CMA Awards held in Singapore. Also, Simbland Excellence Award in 2012. My dear sons and daughters, you are the future of this nation. You have been working really hard for more than 2 years for the most important exam of your academic life. With the support of your teachers and parents, while our country was going through a terrible economic crisis after a pandemic. Considering all that, my dear sons and daughters, I name you as one of the strongest generations this country has ever produced. No matter what life throws at us, we still move forward. Understanding the requirement of future generation, understanding the situation of this country, Achievers decided to come up with this valuable series of accounting webinars to guide you to achieve high marks in your GCE advanced level examination. Today, we discuss part 1 of accounting paper during 2 respective sessions. The paper is already sent to you in PDF format, so get it downloaded and keep it with you so you can follow the same with the lecturer. This Zoom meeting can accommodate a limited number of participants, so be with us until the end. And if any of your colleagues are unable to join Zoom, I think the link has been sent to you, so you can get it downloaded. And you can inform your colleagues who are unable to join Zoom that we are live on our YouTube channel, which is Achievers, and also we are live on our Facebook page. And also, while the lecture is happening, if you have any subject-related questions, you can forward them in WhatsApp messages. I'll give you the WhatsApp number. Please write it down. 0773 125 674. 0773 125 674. 0773 125 674. That is the WhatsApp number. You can send any subject-related questions to this WhatsApp number. And also you can raise questions through YouTube and Facebook chat options. Also, you can note down our hotline number for future reference. Write down our hotline number is 0777 895 900. Our hotline is 0777 895 900. I'm not willing to take more of your valuable time. And here we are going to start our first session of the day. During the short break that you are receiving after the first session, there's a surprise awaiting you. So we will unleash a surprise during the first break. And I am happy to invite Mr. Chaturanga Sandarwan, Senior Lecturer, Department of Accounting, Faculty of Management Studies and Commerce, University of Sri Jayawardhanapura, to continue this session.
Good evening, my dear students. Hope I am audible enough. Am I? Can anyone confirm whether I am audible? Okay, thank you. Today we are meeting to discuss a very important paper which will help you to face for the upcoming examination. Before I commence the session, let me tell something about you. As I think, there are two sets of students. One set is the students who are almost ready for the examination, and the other set is who are not ready for the examination. Now we all know that the examination has been postponed about 1.5 months. So the first category, first group of students, they might think that, okay, we are almost ready for the examination, but the examination has been postponed. Therefore, we should not work as we were working earlier. So don't think like that. The students who are almost ready for the examination, you have to keep the same momentum. You have to keep the progress going. Therefore, today's session will be helpful you to keep the same momentum. The second set of students who are not ready for the examination. So you should have some gaps, some lacking points, lacking areas in the syllabus. So you have an ample time to get ready for the examination. So during my session, if you have any questions, both first set and second set of students, you can ask. And hope that you have got the paper, which will be a very important paper. So you can discuss the paper with me today, and when you are closing to the examination, take this paper once again and do it. And before I start the paper, let me tell one more thing. That is, you know that we are working in the university, so we are having very busy schedule these days because of the examinations happening in the university. Therefore, within a very short period of time, I made this paper. So there may be slight issues or errors in the paper. So please tolerate them. During the session, if there are errors or mistakes, I will let you know. Okay. I doubt whether this paper is visible, not visible. Therefore, I will share my screen and discuss the paper. You know that in the first paper, there are 50 questions. The first couple of questions are very easy questions. Okay, that's the nature of the paper. First couple of questions are very easy. Very first question will come from the objective of accounting, objective of financial accounting, objective of financial statements, or objective of general purpose financial reporting. Okay, so you have to get ready for the first question. Okay, let's get into the paper. You can see the first question: which of the following statements best describes the purpose of accounting? Now, when you read the paper, I know that you don't have the print of this right now, but at the examination you get the print. So when you read the paper, you have to be very conscious. You have to underline the important phrases. And if you read the question twice, the first time is a waste of time. Therefore, at the first instance, you need to read the question with understanding. That's a target, that's a challenge. Keep in mind. Let's go to the question number 1. purpose of, sorry, purpose of accounting. Very simple. Let me mark the answer straight away. Provide information to the interested parties of a business unit to make decisions about that business unit. Therefore, answer is number 3. And please remember, my dear students, in the first paper, you will be given an space to mark the answer like this. Okay, like this. Unfortunately, we were unable to put that space into the paper, but you know that the original paper has a space like this. So you have to write your answer on the space given. Now say for example, the answer for the question number 1 is third one. Okay, next one. An employee of Dushanta Public Limited Company has filed a compensation case. Compensation case. This employee has requested a compensation from the company. Yes, that's good. While I am reading the question, you can mark the answer and you can send the answer to me. So some students are doing that. Very good. Okay. Dushmanta Public Limited Company has filed, not the company, an employee of the company has filed a compensation case against the company. This obligation and its financial impact have been mentioned in the financial statements in this regard as at 31st March 2022. So they have mentioned it, but it doesn't say that they have recognized it. Recognized. Okay, I think that in this seminar, there are no students from the 2023 batch. There are no students from the 2024 batch, because I am focusing on 2022 batch. Therefore, if you are from 2023 or 2024, the things that I will be using or telling will not be understandable, because my focus is on the 2022 batch. Okay, so recognizing means we incorporate that item into the financial statements, but it doesn't say that this item, this compensation thing, has been recognized into financial statements. Rather, they say the company has mentioned it with its financial statements, maybe in a note. So what is it actually? What is it? If you can remember LKAS 37, it is a contingent liability. Okay, legal case, a contingent liability. So what they have done, they have mentioned, they have disclosed the fact that there is a compensation case and this is the financial impact in its notes. It's a disclosure. But what is the problem? Problem is the most relevant accounting concept for this is very simple. It is disclosure concept. Disclosure concept. Now I got the answer from some of the students as number 1, prudence. Prudence can be the answer if this obligation has been recognized. Got it? If this obligation has been recognized, the prudence will be the concept, but it has not been recognized. It has just mentioned. Got it? Therefore, based on the question, the answer is number 4. Now look at Puti. What you think and what is correct may be different. So that gap should be minimized. That can happen even at the examination. Therefore, you need to be very conscious, as well as you have to be very analytical. Very analytical. And when you read it, okay, this has not been recognized. Okay, this has been mentioned in its notes. Therefore, they have disclosed the fact. So it is a disclosure concept. Got it? So first 2 questions are done. we come to the third one. The government has recently increased the VAT rate from 8% to 15%. We know that. From 8% to 12% and thereafter 12% to 15%. I don't know what will happen at the time you face the examination. Okay. And necessary amendments have been passed in the parliament. So that is very important. Now, as a policy, government has increased the tax rate, VAT rate from 8% to 15%. Now, it should have been legally approved. Otherwise, this change cannot be implemented. Therefore, they have got this act passed in the parliament. What is the correct accounting environmental factor or factors? Now look at Ute. Because of the government policy, they have changed the VAT rate. So it is political and economic environment. Political and economic environment because of the government policy. And to legalize it, they have got it passed in the parliament. So it is legal aspect. So the environmental factor is what? Legal. Therefore, there are two accounting environmental factors are affecting to this case. One is political and economic, the other one is legal. Therefore, the answer for the question is political and economic environment and legal environment. Therefore, answer is number 4. Number 4. That's why I ask you to read the question very consciously plus very analytical way. We come to the question number 4. Again, this question has been come from the accounting concepts. You know, in the paper, there are a couple of concepts related questions. If you study the past papers, you will see a couple of accounting concepts related questions. Well, fourth one, accounting concepts that provides the basis for recognizing membership fee receivable. Look at that. Recognizing membership fee receivable as an asset in the statement of financial position of a non-profit organization. Okay. Now, the non-for-profit organization is given to mislead you. Okay. Now, remember, there is an income. Whether we received cash or not, that doesn't matter to recognize that income. There is an income irrespective of the cash receipt where we recognize the income. Okay. So what is the accounting concept? Forget about the non-for-profit organizations. There is an income irrespective of the cash receipt, we recognize the income. So what is the accounting concept? What is it? It's accrual. Accrual. So now apply that case to the non-for-profit organization. Even in a non-for-profit organization, they have income. What is the main income? Subscription. We call it as membership fees. So membership fee or subscription is an income. So they have recognized the income irrespective of the cash receipt. Okay. Because of that recognition, membership fee receivable asset has been arisen. So the accounting concept is what? Accrual. Therefore, the answer for the question number 4 is accrual concept number 2. Number 2. Now, these 4 questions are fairly simple questions. You can get full marks within a shorter period of time. But if you look at the 5th question, a business has purchased a stock with a marked price. Another name for marked price is list price. If you have the paper, you can write list price. List price. Okay. Purchased a stock with the list price. Okay, I am getting a question. So in the SOFP, we don't use accrual concept. Who say? Wrong. Because of the accrual concept, debtors will be arisen. Because of the accrual concept, creditors will be arisen. So debtors and creditors are asset and liabilities. They go to the SOFP. Okay. Therefore, if you tell that, or if you say that accrual concept is not related to the elements which go to the SOFP, your statement is completely wrong. Got it? Therefore, the correct accounting concept for the question number 4 in this paper is accrual. We are discussing the question number 5. A business has purchased a stock with the mark price or list price of 500,000 on credit at a discount of 10%. So those words are very important. This stock has incurred a transportation cost 30,000 to bring the stock to the business location. So they have incurred. Now here incurred means paid cash, paid. After bringing the stock to the business, the owner of the business took a stock of this stock with the mark price, again mark price, list price, another name, of 50,000 for his personal use. 50% of the remaining stock, look at that, remaining stock. After the drawings were taken by the owner, the remaining stock of that 50% was sold on credit, with a profit of 84,000. The net effect of recording these transactions in an accounting equation. Now, if you answer for this question correctly, you are a superb one. You are an exceptional one. You are an excellent one. A brilliant one. But unfortunately, I can't give time to do that. So I will do the question number 5. What has happened in the question number 5? They have purchased a list price of 500,000 worth goods or stocks, and list price is always before the discount, always before the discount. Therefore, we have to deduct 10% discount, that is 50. Therefore, our purchase value is 450. That is our purchase value. If I write the basic accounting equation, asset equals liabilities plus equity, we purchase 450 worth stocks, asset increases on credit, therefore liabilities increases. The first one is this. And it says they have incurred 30,000 to bring this stock to the business premises, business location. So when they incur transportation cost, cash decreases. And if you can remember the LKAS 2 accounting standard, I mean the inventory accounting standard, the cost of inventory is not just the purchase price. The all cost that you incur to bring the inventory or stock to the business premises or business location are included into the cost of the inventory. Therefore, this 30,000 transportation cost, cash decreases. On the other hand, added to the stock, because it is a part of the cost of inventory, If you can't remember the LKS 2, later you can refer. Okay, that is the second one. Now, cost of this inventory or stock is 450 plus 30, 480. That is the cost. And the owner of this company has taken away 50,000 list price or marked price inventory for his personal use. Now look at this transaction and think logically. Now cost is 480. This 30,000 transportation cost was incurred to bring this entire stock to the business. After bringing this stock to the business, owner has taken away part of it. Now we have to calculate the cost of the inventory or cost of the stocks taken away by the owner. Cost. So I am going to calculate drawings cost, drawings at cost, drawings at cost. Okay. Now they say the stocks that have been taken away by the owner has a list price of 50. Look at this. We purchased 500,000 list priced stock. Of that, 50 list price stock have been taken away by the owner. If you relate these two figures, 500 list price purchase, 50 list price drawings. So as a percentage, how much of stocks have been taken away by the business owner? 550 drawings. 500 purchase, 50 drawings. Therefore, it is 10%. 10%, isn't it? 550. 500 purchase, 50 drawings. Okay. So we want to calculate the drawings of stock at cost. Right? Total cost is 480. We purchase 500 list price stock. Of that, 50 list price stock has been taken away by the owner. Right? Now, if you think logically, a part of this transportation cost relates to the stocks that have been taken away by the owner. Okay, part of this 30 relates to the drawings, in other words. Okay, therefore 10%, 500 over 50 means 10%, right? 10% of the cost of inventory or stock has been taken away by the owner. Therefore, we can cut 1 0 here, here 10. Okay, therefore 48. 48 is what? The cost of the inventory that has been taken away by the owner. Drawings at cost. So when the owner does drawings, inventory decreases by 48. On the other hand, equity decreases by 48. Now, we purchased inventory at 480 and owner has taken away 48 worth of inventory. Therefore, remaining 480 minus 48, it's 432. Am I correct? 2, 3, 4. Yes. Now this is the remaining stock at cost at the business location. Now in the last sentence we have said that of this 50% are sold. 50%, meaning 432 into 50% means half. So it is 216. That is the cost of the items being sold, and this is sold at a profit of 84. Then what is the selling price? Selling price is summation of these two. Is it 300? 300. Now very simple. Stock cost in 216 have been sold at 300 on credit. Now this is a very simple transaction. So we can record it. Cost of the inventory sold can be deducted from asset 216. And 300 is a debtor's value, again an asset. So asset increases by 300. And there is a profit of 84 that belongs to the owner. Therefore equity increases by 84. So you take the net impact. Take the calculator and do the calculations. 84 minus 48, it's 36. Here 450. You know that summation of liabilities and equity should equal to the asset. It should be 486. 486. And if you have got the answer prior to me, you are an exceptional guy. Okay, exceptional. Now, the answer for this question is therefore 486, 450, 36. Fourth one. Answer is fourth one. Yes, there are two answers with same figures. I told you that there can be little mistakes in the question paper. Therefore, answer is 405. 405. Same answer. Right, we come to the question number 6. No, you can't deduct the transportation cost as an expense, because if you study the LKAS2 stock inventory accounting standard, transportation cost that you incur to bring the inventory to the business premises is a part of the inventory cost. So you can't deduct this 30 from the equity. It is incorrect, wrong. Question number 6. According to the conceptual framework of financial reporting, a measurement technique, or rather we can say measurement basis that cannot be used to measure elements of financial statements. And if you can remember, there are two extremes of measurement basis. Measurement basis. One is historical cost. Other one is current value. Now, under current value, there are three: fair value, value in use or fulfillment value, current cost. These are the measurement bases as per the conceptual framework to measure the elements of financial statements. Now, the question is that cannot be used as a measurement basis. Fair value is there, historical cost is there, utility value is not there, current cost is there, carrying value is not there. There are two answers. Of course, it is a mistake. Shall we? This is okay. Sorry. Fair value is there, it is okay. Historical cost is there, okay. Current cost is there, okay. There are two answers, 1 and 4. Shall we make it as one answer question? We'll write this as value in use. Value in use. Or else, just for your knowledge, you can mark both answers, 1 and 4. But if I make it as value in use, it is there in the conceptual framework, therefore answer is number 1. Yes, present value, yes. Correct. Value in use means present value. Right. So we come to the question number 7 and 8. Arunalu Public Limited Company purchased a stock of goods with a list price. Look at that. List price. Now you know the meaning of list price. Before the trade discount of 400,000 on credit from Kirti Company Limited to a trade discount of 10%. Trade discount of 10%. Also, a lorry was borrowed from the business for 5 million to transport goods. Okay, lorry was borrowed. It's a lorry at 5 million to transport goods. 80% of the amount due was returned and paid in cash subject to a discount of 5,000 as stock purchase on credit from Kirti Company Limited. Okay, what do you understand this? What do you understand by this? Now there is a mistake in the question. 80% of the amount due was returned and paid in cash subject to a discount of 5,000. And here it should be a full stop. And also another name is required. Okay, I will do like this. I told you that I prepared this paper with a very short period of time. So when it was typed, there are some mistakes. Okay. So what we can do is you just look at or you just listen to the explanation made by me, and I will upload the paper, fresh paper with the amendments, with the corrections. Okay, is that okay? Just listen to the explanation and get something out of this seminar, and I will upload or I will make arrangements to have a fresh paper with the amendments. Okay, great. Thank you. Right. So meaning of this is 80% of the amount due to Kirti Company was returned and paid in cash Okay, let me cut this sentence and write a fresh sentence. Return outward 50,000 list price. Return outward 50,000 list price. And after that, cash payment 80% of amount due subject to 5% discount. And last sentence is correct. All goods purchased were sold on credit for 550,000. Question number 7 asks us the relevant source document for recording transactions done with Kirti Company Limited. Kirti Company Limited. Look at that. Okay, sure. I will say the corrections once again. The first sentence is return outward 50,000 list price. Return outwards 50,000 list price. Return outwards 50,000 list price. And the next one is cash payment 80%. Cash payment 80% of the amount due. Cash payment 80% of the amount due. Cash purchase 80% of the amount due. Subject to 5% discount. Oh, 5,000. Sorry, 5,000. Subject to 5,000 discount. Subject to 5,000 discount. Subject to 5,000 discount. Okay, the question number 7 is asking about the source documents. Okay. Now source document for the transactions made with Kirti company. Now from Kirti company we purchase inventory on credit. Therefore the source document is invoice. And a lorry was purchased on credit, but it doesn't say that it was purchased from Kirti company. Usually we purchase lorries and other motor vehicles from motor vehicles trading companies, not from normal vendors. Therefore, you can't take that because that hasn't been happened with the Kirti company. So please ignore it. And return outwards. The source document is what? Debit note. And there is a cash payment of 80% amount due. So the source document is payment voucher. And these are the 3 transactions that have been happened with the Kirti company. And last one is a sales transaction. We don't usually sell to the creditors. We sell to the debtors. Therefore, the answer for the question is invoice, debit note, payment voucher. Answer is number 1, isn't it? We purchase on credit, so the source document is invoice. We return them to the supplier. Screenshot. Right? Okay, we are doing now the question number 8. You know that gross profit is equal to sales minus cost of sales. Now we know the sales, that is 550. Sales 550. We want to calculate the cost of sales. How? Now we purchased 400 list price stock, and when we purchase we have been offered 10% trade discount. This is list price, 10% discount, that is 40. So purchase value is how much? 360. Of that we have returned stock with 50,000 list price. Return outward, list price is 50, but we purchased at 90%, isn't it? Because we deduct trade discount from the list price and we recognize the purchase at 360, that is 90%. So return outwards we are given the list price. So from this we have to deduct the discount. 10% means 5. Therefore the return outward value is 50 minus 5, 45. 45. Okay. Therefore the net amount is 360 minus 45, 315. And we have sold all the stocks. All this stock has been sold. Therefore this becomes the cost of sales. Sales minus cost of sales, 235. 235. Do we have an answer? Yes. Fourth one. Answer is fourth one. Okay, so this is also a good question. We have done 8 questions. Third one, sorry. Answer is 235 years, third one. Okay, answer is correct, but I marked fourth one. That can happen to you at the examination, right? So that's why I purposely did that. Let's say like that. Okay. Use the information below to answer question number 9 and 10. Now, if you do 10 questions, meaning that you have done 1/5, 20% of the paper. Okay. Now, after we do another 2 questions, 1/5 of the paper, meaning 20% of the paper has been done. Got it? Right. Balance as on 31st March 2021. Look at that. Usually that is the end of the last year, beginning of the current year. Stocks 45,000, VAT liability 17,000, debtors control 81,000, cash 28,000. These are the beginning balances, aren't they? In the year ending 31st March 2022, in the current year, purchases 598,000, sales 575,000, net difference in debtors, net difference or net increase in debtors 40,000. What does that mean? What does that mean? Net increase or net difference? Net increase or net difference of debtors. Meaning, if the beginning balance of the debtors is 0, the ending balance of the debtors is 40,000. Look at this. If the beginning balance of the debtors is 0, the ending balance of debtors is 40,000. Now, let's take another example. If the beginning balance of debtors is 100,000, the ending balance of debtors is 140,000. That is the meaning of that. Net difference in debtors. Then distribution, administrative and finance cost 48,000. Now what does it say? 15% VAT is included. You know the current VAT rate is 15%. 15% VAT is included in the above purchases and sales. This purchase and sales includes 15% VAT. So this is equal to how much? 115%. This is also 115%. The above purchases include borrowing of an equipment costing 230,000 inclusive of 15% VAT. My God. Now this purchase includes borrowing of an equipment, meaning equipment purchase at credit. Equipment purchase on credit. 230. This includes 15% VAT. 230 is inclusive of 15% VAT. All sales are on credit basis, right? All sales are credit, therefore no cash sales. And all purchases are cash. Okay, no credit sales, no credit purchases. The cost and the net realizable value of stocks as at 31st March 2022 are 64,000 and 58,000 respectively. You know the inventory accounting standard, cost and net realizable value. As at 31st March 2022, distribution, administration and finance cost payable is 5,000. Payable is 5,000. It should be payable. Now this is the case. The question number 9. No. Purchases are cash. Equipment have been purchased on credit, but they have done an error. Okay, purchases are cash basis. Equipment have been purchased on credit basis. We can't add these two together. but they have erroneously added the purchase of equipment into purchase of inventory. So it's an error. Got it? It's an error. Okay, the question number 9 is journal entry to record the purchase of equipment. Very simple. Now purchase of equipment on credit, this includes 15% VAT. Let me come to the board. Question number 9. Now we purchase an equipment including 15% VAT at 230. Now you know that if the VAT rate is given in the question, we assume that the business is registered for VAT. But if the VAT rate is given in the business, we assume that the business is registered for VAT. Okay. So in a VAT registered business, we can't include VAT in the purchase, VAT in the sales, or even VAT in the purchase of fixed asset. And if you refer the LK 16 accounting standard PPE, property plant and equipment, non-refundable taxes are added to the cost, but refundable taxes are not added to the cost. Therefore, for a VAT registered business, this VAT amount can be refunded. Therefore, equipment value should not have VAT. Equipment. Okay. Now, inclusive of 15% VAT, the amount is 230. This is equal to 115. Therefore, so we can multiply by 100. Therefore, it is 200. Therefore, equipment account debit 200. And VAT paid on purchase of equipment can be refunded, right? Can be can be taken back from the government. Therefore, VAT control account debit. VAT control account debit the VAT amount 30. And we purchased this equipment on credit. We borrowed an equipment. It says like that. Therefore, payable account, or we can say borrowings or debt account, credit 230. Look at the answer and mark the answer. Right? As per LK 16, you cannot include refundable taxes to the cost. Okay. Therefore, this 230 includes 15%. You can ask from your teacher. Okay. Right. So refundable taxes cannot be included in the cost of PPE. That's why we removed it. It's a separate asset, therefore VAT control account debit. Anyway, we have to pay the total to the supplier. So it is 230. What is the answer? And this debit and credit means the entry. Fifth one, equipment debit 200, VAT control debit 30, loan credit 230. Yes, answer is fifth one. Question number 10. Yes, we want to remove this from the purchase. But the question is journal entry to record the purchase of equipment. Okay, next one, cash account balance and VAT liability. There are 3 questions. Cash account balance and VAT liability, and the other one is profit for the year ended 31st March 2022 and the value of stocks to be presented in the statement of financial position as at 31st March 2022. So very good questions I'm doing. We want a cash account, we want a VAT liability account. Let me prepare these two accounts to find the cash balance. As per the 10th question, we want a cash account and we want a VAT liability account, or we can say we say it as VAT control account. VAT control account. Right. So from this we get 30 VAT to the VAT control account. 30 VAT to the debit side, VAT control account debit from the equipment. And we will take the beginning balances. Cash beginning balances is 28. Brought forward balance is 28. VAT liability, so it has a credit balance of 17. Brought forward from the credit side 17. Got it? And also we may require the debtors control account. Shall we prepare that as well? Debtors control account, because we want to know the cash receipt from debtors. Debtors, its balance is at the beginning of the period 81. Okay, so we can do the rest. Now purchases is, as per the question, 598. Purchases are given as 598. Now this includes 230 equipment purchase. Now that has been adjusted. So the remaining balance is only the purchase. Remaining balance is the purchase. So difference 598 minus 230 is 368. And this is including 15% VAT. So we can find the purchase value. Right, purchase value 368 is equal to 115. If so, how much is the 100? It's 320. So how much is the VAT? How much is the VAT? The difference between these two values, 368 minus 320, 48. 48. Now the purchase value is 320. The VAT included in that purchase value is 48. So VAT control account debit 48 because it is purchase. And we want to find the profit for the year. To find the profit for the year, we want gross profit. Right? To find the gross profit, we want cost of sales. To find cost of sales, we want what? Purchases. Now we know the purchase value 320. Okay, keep in mind. And next one, sales. Now sales are given 575. This includes 15% VAT. Therefore, this is equal to 115%. Therefore, we can find the without VAT sales amount. 575 divided by 115 multiplied by 100, sales value is 500. Therefore, VAT amount is the difference between these two, 75. VAT on sales, a liability. Therefore, VAT control account credit coming from sales, 75. 75. VAT on sale is a liability. Therefore, VAT control account credit. Okay, that is done. And it says that all sales are on credit basis. Therefore, debtors control account debit, the total sales including VAT 575. Including VAT. Okay, because we want the amount including VAT from the debtor. Okay, total amount should be recoverable or receivable from the debtor. Therefore, debtors control account debit with VAT. And we know that debtors balance has been increased by 40 end of the year. Therefore, if the beginning balance is 84, closing balance is carried down balance is 81 plus 40, 121. Debtors closing balance is 121. Got it? Now we can find what? The cash receipt from debtors. We know the beginning balance, we know the sales, we know the closing balance, so we can find cash receipt. Debit side 81 plus 575, 656. 656 minus 121, 0, 3, 5. 530 cash account debit 530 from debtors. From debtors. And all purchases are on cash basis. We know the purchase value 368. We have to pay suppliers including VAT. Okay, you know that. Therefore, cash account credit purchase 368 including VAT. Including VAT. What else? Right. Distribution, administration and finance cost. Cash credit, say distribution cost. Now the cost is or expense is 48, but there is an adjustment end of the question. There is 5,000 payable balance. The expense is 48. 5,000 payable means we have paid 43, isn't it? Expense is 48. Payable balance is 5 means we have paid 43. Then we can balance this. Debit side 558. 558 minus 368 minus 43. 147. There should be did I make a mistake? Here 535, sorry. Look at here. 656 minus 121 is 535. 535. So cash receipt is 535. $535. 535 plus 28, 563. That minus 368 minus 43 means 152 carried down balance. Now we know the cash balance. And we can quickly balance the VAT control account. The credit side is higher than the debit side. Therefore 292. 92 minus 78. 92 minus 78. It's 14 balance. 14 carried down balance. Now we can balance or we can mark the answers. Got it? The answers therefore for the question number 10, cash balance 152 and VAT control account or VAT liability balance is 14. Therefore the answer is number 3. Question number 11, profit and the stock value to be presented in the SOFP. This is very simple because cost of the inventory is 64, its net realizable value is 58. We know as per LKS 2, we should record the stock at lower of cost and NRV. Therefore, the value to be presented in the SOFP is 58. Answer is either 2 or 3 or 4. So we want to find the profit. Very simple. Now we have all the ingredients. Let me take it to the other page. Sales 500. minus cost of sales, beginning stock, that is given in the question as 45, and purchases 320 as I remember. Purchases 320, yes. And ending stock, here we adjust the cost. Cost is 64, isn't it? Cost is 64, yes. Therefore, cost of sales 45 plus 320 minus 64, it's 301. Therefore, GP, gross profit, is difference between these two, 199, and no other income. Distribution cost, administrative expense, finance cost is given as 48 minus 48. And also the cost of the inventory 64, its net realizable value is 58. So we have to write off inventory. We call it as stock write-off. Stock write-off by 6, because cost is 64, NRV is 58. We want to write it off. 199 minus 48 minus 6, 145 net profit. 145 net profit. Therefore, the answer for the question number 11 is 145 and 58. Answer is number 2. Uh, 5,000 last 5,000 is the payable. Distribution, administration and finance cost payable. Please add that word. Cash purchase is 598. No, you can't take 598 because it includes purchase of equipment. Purchase of equipment is not part of the purchases. Now I have calculated it here. This has an error. Okay, so we removed the purchase of fixed asset equipment. Therefore, purchase value is 368 including VAT. After removing the VAT, it is 320. So that is correct. We come to the question number 12. Visitor business has not kept any records other than debiting the net salary. You look at that, debiting net salary of 340,000 to the salary account and crediting it to the cash account. So this is correct, but this is wrong. Right? We know that salary expense is the gross salary, not the net salary. Okay? This is wrong. In the month of March 2022, only 10% employee contribution, 10% comma, there should be a comma, employee contribution and 5% welfare contribution are deducted from salary. Okay, 10% for employee contribution for EPF should be EPF. This is for EPF, and 5% for welfare contribution are deducted from salary, and these deductions are calculated on gross salary. EPF 15% of employer contribution. There are mistakes. And ETF, you know, always has to be borne by the employer or the business. 3%. The business also contributes, look at that, business also contributes 10% towards the employee welfare fund. Salary expense and the net effect of the profit, net effect on the profit, if these errors are corrected, are. Okay, very good question. Though it has some mistakes, typing mistakes. Okay. Question number 12. Net salary. You know that gross salary minus deductions, net salary. There are two deductions. One is EPF 10%. The other one is welfare fund 5%. Then we get net salary, that is given 340. Now if you take percentages, if the gross salary is 100%, let me take it here, EPF 10%, employee welfare fund 5%, net salary is equal to how much? 100 minus 15, 85. And if you relate this to the net salary, you can find this one. How do you find this one? Gross salary. This 340 is equal to 85. If so, how much is the 100? It's 400. And if you know the gross salary, that is the basis for calculation EPF, ETF and even welfare fund contribution. So 10% is 40, 5% is half of that 20. So if you deduct these two, you will come to the net salary. Got it? Now the answer for the first question is salary expense. Salary expense is the gross salary, that is 400. And then they want the adjustment to the profit if these errors have been corrected. Okay, impact on profit. Now they have recognized the salary expense at 340, but it should be 400. Therefore we have to reduce the profit. We have to reduce the profit by 60, isn't it? They have recorded the salary as 340, but it should be 400. So expense increased by another 60. Expense increase means profit decreases. Got it? Right. And in addition to this, EPF 15% contribution into 400. That is the employer's contribution, business's contribution. That is 60, isn't it? That's an expense. Because of that, profit will be decreased. As well as there is an addition in this question. The business also contributes 10% to the employee welfare fund as a help to the employees. So it is an expense. Welfare fund. Business also contributes 10% of the gross salary. Therefore it is 40. It's an expense. Therefore profit will be reduced. So altogether 60, 120, 160 are ETF. I forgot to take ETF. ETF. Always borne by the employer. 3% of gross salary 400, that is 12. As it is an expense, profit decreases. So 60, 60, 40, 12, 172, profit decrease. Therefore, the answer for the question is salary expense 400. There are three possible answers. Profit decreases by 172. Therefore, the answer for the question number 12 is number 1. Number 1. Answer is number 1. Question number 13. As at 31st March 2022, the balance of the debtors control account of Devin the business was 350,000. The debtors control account balance. And the balance of the debtors balance list, or list of balances rather, on that date was not equal to the balance of debtors control account. Later following errors were found. A sales invoice of 25,000 was recorded as 5,000 in the sales journal. This has been correctly, or this is correctly recorded in the debtors ledger. Okay, now it has been erroneous in the general ledger, isn't it? It is erroneous in the general ledger. It is correct in the debtors ledger. Number 2, settle the balance of 40,000 of the debtor named Induranga subject to a 5% discount. This has been recorded in the debtors ledger without considering discount. Meaning the total payable, okay, it requires a correction. This has been recorded at the received amount. At the received amount. Meaning they have recorded the received amount, that is now 40 receivable, 5% means it's 2, so received amount is 38, so they have recorded this 38. That is the meaning of that. Okay, there is a mistake, I mean a lacking sentence. This has been recorded at the received amount in debtors ledger without considering the discount. Last one. Now, if you look at it carefully, this has been occurred in the debtors ledger, sub ledger, debtors ledger. Now, this is in the GL, general ledger. Last one, total in the debtors analysis column of the cash receipt journal has been under collected or undercast or undervalued by 13,000, undervalued. So, it has been erroneous in the GL. What is the question? The balance of the trade receivables to be shown in the statement of financial position. Now, in the statement of financial position, Putte, we have to present the corrected or adjusted control account balance. So, what does it ask? To find the adjusted debtors control balance. And number 2, and the balance in the debtors balance list on that date. Right. So, we can prepare. Simple question. Question number 13. We can prepare debtors control account as well as we can prepare debtors reconciliation. We can take list of balance here. Some items are added, some items are deducted. So it will be equal to adjusted control balance. The debtors control balance debtors control balance before these corrections made 350,000, balance brought forward 350. Okay, the first one has been happened in the general ledger. The credit sales is 25,000, but it has been recorded as 5,000 in the sales ledger. Okay, so sales are 20 lacking. Therefore, debtors control account should be debited by further another 20. And the second one, a debtor has settled 20,000. Sorry, debtor has settled 40,000 balance under 5% discount. But what has happened in the debtors ledger, we have ignored the discount. We have recorded only the received amount. So it has been mistaken in the subsidiary ledger, debtors ledger. So that comes here. Now because of that discount given, the list of balances will be reduced by 2 because they haven't recorded the discount allowed. If we record it, list of balances will be reduced. Last one, total in the debtors analysis column in the cash receipt journal. Now what are available in totals of the debtors analysis column in the cash receipt journal? Receipt from debtors. Okay, now this is all about receipt from debtors. It has been understated, undervalued, undercast by 13. So it has been erroneous or mistaken in the general ledger. Therefore, debtors control account credit cash 13 because it is understated. Cash receipt is understated. Now we can balance 370 debit side, 370 minus 13, 357 if I am not mistaken, carried down, that comes here 357. Minus 2 means if we go upside, minus things can be added back, therefore 359. Second answer. Therefore the answer is number 5. Answer is number 5. Answer is number 5. Question number 14. Changes in stocks and cost incurred in the manufacturing business for the year ended 31st March 2022 are shown below. Raw materials decreased by 65,000. Unfinished, or we call it as work in progress, both are same, increased by 8,000. Finished goods increased by 40,000. Purchase of raw materials or direct materials 600,000. Direct labor cost incurred 410,000. Manufacturing overhead cost 280,000. Non-manufacturing overhead cost 220,000. The requirements are production cost, cost of sales. Very simple. Question number 14. We have purchased direct materials at 600. Okay, but we have raw material stock or direct material stock, right? Now direct material stocks or raw material stocks have been decreased by 65, meaning that compared to the beginning stock, the ending stock has been decreased by 65. What does that mean? Compared to the beginning stock, the ending stock of raw materials have been reduced by 65. Okay. Now what is the higher amount? Higher amount is beginning stock. Lower amount is ending stock. Always beginning stock is added here. Ending stock is deducted here. Right. Now in this case, beginning stock is higher than the ending stock. Okay. Therefore, beginning stocks are added, ending stocks are deducted. So higher amount should be added. Therefore, net effect should be 65 should be added. 65 should be added. Therefore, direct material consumed is 665. And then direct labor cost incurred 410. No direct other. Therefore, summation of this is prime cost, but we don't need that. Then manufacturing overhead 280. Now we want to just WIP, work in progress, unfinished goods. Okay, unfinished goods. Unfinished or work in progress increased by 8,000, meaning compared to the beginning stock, the ending stock has been increased. Which is the higher one? Ending stock. Okay, beginning stock are added, ending stocks are deducted. The higher amount is ending stock. Therefore, it should be reduced or it should be subtracted from here. Now we got what? Manufacturing cost. Manufacturing cost 665, 410, 280 minus 8, 1347. So that goes where? Cost of sales calculation as manufacturing cost. $1,347. And here we have to adjust the finished good stock. Finished good stock. It says finished good stocks has been increased by 40. Increased by 40. Compared to the beginning date, ending stock has been increased by 40. Okay. Beginning stocks are added, ending stocks are deducted. Therefore, we should deduct 40. Therefore, cost of sales is 1,307. Look at the answers. Answers are therefore 1347 and 1307. Answer is number 3, isn't it? Number 3. 40 finished good stock. 40 finished good stock. Got it? Right. So we come to the question number 15. On 1st April 2021, a society had 60 members and the outstanding membership fee on that date was 12,000. Annual membership fee per member is 2,000. On 1st April 2021, an amount of 600,000 was received as a donation to purchase sport equipment. During the year ending 31st March 2022, 510,000 was used to purchase sport equipment from this fund. This donation should be recognized in income to the extent of use. Operating expenses for the year ending 31st March 2022 are 85,000. It was decided to cut off or write off rather. Write off membership fee of two members whose membership fee are arrears for 2 years. Arrears for 2 years on 1st April 2021. The requirements are surplus and the change in equity. Look at that. Change in equity. Increase or decrease. This should be surplus. Surplus. Okay, here we go. Very good question. Question number 15. So we can quickly prepare an income statement. Under income, we know that there are 60 members. There are 60 members at the beginning. So membership fees or subscriptions, members subscriptions. 60 members, annual subscription fee is 20. Here 60, therefore 120. 120. And we have received 600,000 for sport equipment. It is a special donation. Special donation 600. Okay. We have used 510 from this donation. Used 510. Therefore, remaining balance is 90. And it says this donation, special donation, is recognized in income to the extent of its use. Okay, so used amount is 510. That should be recognized as an income. So donation 510. Then expenses. And it says the operating expenses are 85. Operating expenses are 85. And in addition to that, there was 12,000 receivable balance at the beginning of the year, and they have decided to write off the receivable balance of two members for 2 years. 2 members for 2 years. So we can find it. Write off 2 members for 2 years. Annual subscription is 2. Therefore 2 into 2 into 2. 2 into 2 4. 4 into 2 8. Therefore 93 should be deducted. Here 630. Therefore surplus, because income is higher than the expenses. 630 minus 93. 537. That is the answer for the first part. Second part is change in equity. Change in equity. Because of the surplus, equity increases by 537. And because of the remaining balance of the special donation, equity increases. Therefore, altogether 617 equity increase. It's 627, isn't it? $627, yes. Therefore, the answer is 537, 627. Number 4. Question number 16. Which of the following statement or statements is or are true regarding the partnership business? According to the section 24 of the Partnership Ordinance 1890, profits of a partnership must always be distributed equally. It is correct. Now, as per the section 24, profit should be distributed equally. Therefore, this is correct. B. According to the Prevention of Frauds Ordinance or Fraud Prevention Ordinance 1840, if the initial capital is more than 1000, a partnership, there should be an agreement. That is wrong. Why? There should be a written agreement. Okay. What does Fraud Prevention Ordinance say? If the initial capital is more than or greater than 1000, the partnership business should have a written agreement. Okay, here just an agreement. So that is correct. That is wrong, therefore. Okay. Okay, one of your teachers recommended to do 1 to 15 questions from the first part, and then again as I saw the message, 31 to 43 during the next attempt, I mean next try. That depends on your style. We can't specify this is the best method. You are the person who knows better than anyone else. Therefore, you should have your own method, own strategy. Now, some people, I know that some people start with the question number 31, short-ended questions. Okay, some people start with the question number 40. Some people start from question number 1 and go until the 50th. Okay, so that depends on your style, your practice, your time management ability. Therefore, I can't specify any method as the best method. You can explore yourself and find the best or suitable method. Okay, so this time is very important for such kind of things, to do experiments about yourself. Okay, coming back to the question. First one correct, second one wrong, third one, as per the section 42 of the Partnership Ordinance 1890, when payment is not made to the withdrawing partner, or we call it as outgoing partner. The outgoing partner's equity shall be transferred to an equity account. Wrong. What does it say? If the equity of an outgoing partner is not settled at the retirement, we should transfer that equity balance to a loan account, liability account. But they say to an equity account. Therefore, that is wrong. Therefore, true sentence is A only. A only. Because of this, it should be transferred to a loan account, not to an equity account. Okay, right. Now here the important word is written. There is no word written. Therefore, it is incorrect. First one is correct. Question number 17. An accounting equation shows the balance as on 31st March 2022 after recording the transactions of the year ended 31st March 2020. Again, there is a mistake. Here 2022 and balances as at 31st March 2021. But don't worry, you will understand it here. We are given beginning balances and ending balances. So it is clear here. Beginning balances and ending balances. So forget about the sentence above. And we want to find the equity. Following errors have been occurred during the year ended 31st March 2022. Interest income of 20,000 is recorded as 2,000. Okay, what is the requirement? Correct net profit and correct equity. Okay, what we can do is we can adjust these errors. We can correct these errors in the equation above. So I am adjusting these errors to the closing balances. Closing balances. How? Say for example, first one, interest income of 20,000 is recorded as 2,000. So another 18,000 should be recorded. Okay, cash increases. Okay, this one is cash. This is debtors. This is stocks. This is fixed asset. This is equity. This is liability. Okay. So remaining 18 should be added to the cash, and it is an income. Therefore, equity should be increased by 18. We can find the given equity, and that should be increased by another 18,000. So let's find the given equity. How? Total of asset minus total of liabilities. So take these figures: 400,000, 70,000, 64,000, 44,000 minus this figure. Let me take it: 400,000, 70,000, 64,000, 44,000 minus 156. Okay, 400, 70, 64, 44 minus 156. It's 422. 422,000. And for that we have to add 18,000 interest income, remaining balance. Second error, owner's stock drawings. Owner's stock drawings of 8,000 recorded as cash drawings. So it is not a cash drawing, it is a stock drawing. Okay, anyway it has been recorded as cash drawings. So we can add 8,000 to the cash because it is not a cash drawing, and we can deduct 8,000 from stocks because it is a stock drawings. Number 3, a sale of an equipment with carrying value of 125 for 110,000 was completely omitted. So carrying amount 125,000 can be reduced, can be deducted from fixed asset. 125,000 deducted from fixed asset, carrying amount, and it is sold at 110,000. So cash increases by 110,000. Okay, and there is a loss, isn't it? Carrying amount is 125,000, sales value is 110,000. It is a loss of how much? 15,000 loss. Therefore equity decrease. The owner has not added additional capital during the year. That's it. So we can take the correct equity balance. So correct equity balance 422,000 plus 18,000 minus 15,000. It's 425,000. That is the correct equity balance. And if you know the beginning equity balance, if you know the ending stock balance, we can find the profit. How? Very simple. You know the profit equation is ending equity minus beginning equity plus drawings minus additional capital. Now we know the correct ending equity balance is 425. Yes. Beginning equity balance 310. Drawings 8. No additional capital. 425 minus 310 plus 8. It's 123. Therefore, the answer is number 4. Question number 18. Answer number 4. Yes. Very simple. Correct net profit is 123. Correct equity balance 425. Answer is number 4. Question number 19. The overdraft balance of a business as of 31st March 2022, overdraft balance, OD balance, as per the bank statement was 18,000. The balance on the bank statement on that date did not agree with the cash account, right? As at 28th February 2022, 28th February 2022, last month, because we are in the March. Okay. As at 28th February 2022, last month, the value of unpaid checks was 69,000, out of which 61,000 checks have been offered for payment. Meaning, end of the last month there were unpresented checks. 69,000, of which 61,000 have been presented during the current month. Okay, meaning, in other words, 8,000 is still unpresented. 8,000 is still unpresented. Then there were no outstanding checks on 28 April 2022 and 31st March 2022. Here outstanding means you can cut it and write down unrealized checks. Unrealized checks. Okay, at the beginning of the month and at the end of the month there are no unrealized checks. Out of the checks deposited in March 2022, a check of 7,000 has been dishonored. Deposited check has been dishonored. The total value of the checks issued in March 2022, 375,000 issued checks, of which 341,000 checks have been offered for payment, presented in the month of March 2022. Only 1,500 was recorded as bank charges when bank debited 2,000 as bank charge. The questions are: reconcile balance. Better if you use adjusted balance. Adjusted balance of cash account and balance before the reconciliation. Balance before the adjustment. Cash account. So you can prepare an adjusted cash account and bank reconciliation. Okay, here we go. Question number 19. Adjusted cash account and bank reconciliation. I take adjusted cash balance here, add unpresented checks minus unrealized checks, then it is bank statement balance. Now this is known as 18,000 OD, 18,000 OD, therefore minus, sorry, 18,000 OD minus adjusted cash account and bank rec. We know the bank statement balance 18,000 OD means minus. Got it? Quickly. Adjusted cash account. The requirements are, of course, the cash balance before the adjustments and cash balance after the adjustments. Those are the two questions asked. Okay. We are given the bank statement balance, but it is an OD balance, therefore minus 18. Got it? Okay, now end of the last month, there were unpresented checks of 69,000. Of that, 61,000 worth checks have been presented in the current month. So still 8,000 checks are not presented. So unpresented check from February, 69 minus 61, it's 8,000. And there are no unrealized checks end of the period and beginning of the period. A deposited check of 7,000 has been dishonored. When the check is deposited, cash account debit. When it is dishonored, credit. And in March, we have issued check worth of 375, of which 341 of checks have been paid or presented. 375 issued, 341 presented. Therefore, from March, unpresented checks 375 issued, 341 presented. It's 34 and no unrealized checks. So we can add 42. Therefore we can find this. And here minus 18, and if we go up from the bottom, we can minus the added items. 42 added, now we can minus 42. Therefore it is minus 60. Minus 60 meaning adjusted cash balance is an OD balance 60. If it is an OD balance, brought forward from the credit side 60, carried down from the debit side 60. Another one is there. Only 1,500 was recorded as bank charges when the bank debited 2,000 as bank charges. Bank has debited 2,000, we have recorded only 1,500. So another 500 should be recorded, bank charges. So the balance before the adjustment 60, 60 minus 7.5, 52.5, brought forward balance. So these are the two answers. One is this, one is this. Right. So the answer is this is adjusted. Here also adjustments. Adjusted balance is 60 overdraft, balance before adjustments, and overdraft of 52.5. Therefore answer is number 2. Answer is number 2. Question number 20 and 21. Sandar and Ruan, of course, two parts of my name, shared profits and losses equally, and given capital balances as at 31st March 2022 and current account balance as at 31st March 2021. Now this is as at 2022, this is as at 2021 beginning date. Chatura was admitted as a new partner on 1st April 2021, beginning of the year, As at 1st April 2021, the goodwill of the business is 3 million. Chatura brought 5 million in cash and equipment worth 300,000 as his share of capital and goodwill. Okay, he has, incoming partner has brought 5,000 or 5 million cash and 300,000 worth of equipment. Now, if you look at this one, if you look at Chatura's account, it has only 5 million cash introduction. Therefore, we can assume that the goodwill has not been adjusted. If the goodwill is adjusted, this balance should be changed. And also, we can assume that these balances are beginning balances. These two balances are beginning balances. Because goodwill has not been adjusted. Therefore, though these balances are given at the end of the period, so it is obvious that these balances are beginning balances. And it says the equipment he brought was not recorded, right? We know that. The new profit sharing ratio is 2:2:1 between Sandaru and Chatura, respectively. There were no terms in the partnership agreement other than payment of salary of 80,000 per month to Chatura and profit sharing ratio. Now, profit sharing ratio is 2:2:1, new ratio. The profit calculated in the last year ended 31st March 2022 was 4,190. There were no drawings by partners. The goodwill is suggested through the capital account. Equipment is depreciated using straight line method 10%. Now, equipment has not been recognized. If we recognize it, we have to depreciate it. No other capital transactions have been taken place in the year ending 31st March 2022. Now, it's a good question. On 31st March 2022, what is the balance of Chatura's capital account and current account respectively? So we can prepare capital account and current account. Question number 20. This is the capital account. Sandaruwan Chatura SRC capital account. Then current accounts, SRC. We can take balances 4,000, 4,500. Sorry, 5,000, 4,000, 4,000. He should not have a balance beginning. So he brought 5,000 cash. So it is very clear that they haven't recorded the goodwill. Therefore, these two balances are beginning balances. And it says clearly current account balances are beginning balances. These balances are 8075. 8075. The new coming partner should not have the beginning balance. Okay, now we can adjust the goodwill. Goodwill is always belonging to the old partners. Therefore, goodwill. The total goodwill of the business is 3,000. All partners are SNR. They were sharing profit and losses equally. So 1,500 and 1,500, isn't it? 3,000 divided by 2. And always the total goodwill is recovered from new partners. Therefore, goodwill debit. Total goodwill is 3,000. New sharing ratio is 2:2:1. So it is 5. 2 to 1, 5. So one share worth 600. 600 into 1, 600. 600 into 2, 1,200. Here 1,200. Okay. Now Chatura has brought 300,000 worth of equipment as his part of capital and goodwill. So it has not been recorded. So we can record it. Equipment 300. Now if we record this 300, we have to depreciate because Chatura came at the beginning of the year. Chatura came at the beginning of the year, right? Therefore, we have to distribute the profit. profit distribution. But net profit is given as 4,190. Is that 4,190? Now prior to that, depreciation charge, because the equipment had not been recognized, so it is pretty obvious that depreciation charge has not been recognized. So Chatura came at the beginning. So this equipment was given at the beginning. So equipment are depreciated at 10% on straight line basis. So depreciation 300 into 10% 30. Because of that, net profit will come down. It is 4,160. 4,160. How did you get the depreciation? 300 into 10%. Okay, now as per the new agreement, because Chatura came at the beginning of the year, so the applicable agreement to distribute the profit is new agreement, isn't it? Right? So as per the new agreement, Chatura is entitled to 80,000 salary per month. So minus salaries. Chatura 80 per month, that into 12 months. 80 into 12, it's 960. Other two partners are not entitled to salaries. And remaining 4,160 minus 960, 3,200 can be distributed as profit shares. Profit shares. Three partners are SRC. Their profit sharing ratio is 2:2:1. Total is 5. 3,200 divided by 5. It's 640 per share. Therefore here 640, double of that 1,280, double of that 1,280. So if we distribute the profit, it will be 0. Okay, so we can credit the current accounts profit shares 1,280, 1,280, 640, and in addition to that, Chatura is entitled to a salary of 960 salary, and no drawings, no other capital transactions. Very simple. Okay, that's it. So we can find any answer. What is the balance of the Chatura's capital account and current account? So we can balance these accounts quickly. Okay, Chatura 5,300, 5,300 minus 600, 4,700. Carry down balance. And similarly, we can balance the current account here 1,600. So obviously no balances in the debit side. Carried down balance is 1,600. Therefore, the answer for the question number 20 is 4,700, 1,600. It's fifth one. Answer is fifth one. Please mark it. Okay. Answer is fifth one. Question number 21. Change in equity of the business and equity of Ruan. No, I think there is a mistake in the question. This is correct. Business equity of the business, this is correct. And this is also correct. Change in Ruan's equity, but in the question, change in the equity of Ruan and equity of business. The two words should be changed. But take these two headings. Business equity or equity in the business, change in Ruan's equity. Okay, you know that in a partnership, equity consists of two parts, capital and current accounts. We have to balance other two accounts as well quickly. 5,500, 5,500 minus 1,200, 4,300. Here also 5,500. 5,500 minus 1,200, 4,300. These two accounts 1,360. 1,360. Here 1,355. 1,355. Okay. Equity of the business. So we have to add all these things. Equity of the business in a partnership. Equity consists capital and current account balances. Take the summation. 4,300, 4,300, 4,700 plus 1,360, 1,355, 1,600. It is 17,615. So what is the answer? Either second one or third one. Second one or third one. That is the equity of the business. This is equity. And next one, change in Ruan's change in Ruan's equity. Okay, change in Ruan's equity. Ruan, this person. Beginning equity 4,000 plus 75, 4,075. Ending equity. Now this is Ruan's equity, not the business's equity. Ending equity, ending balance is 4,300. Capital, current account balance is 1,355. 4,300, 1,355. It's 5,655. So change in equity. Equity has been increased by difference between these two. 5,655 minus 4,075. It's 1,580. If you can't if you can't see 1,580, 80. Therefore, the answer for the question is third one. Third one. Answer for the question is third one. Got it? 22nd question. Following are the details of trading stock, not regarding trading stock in January 2022 of a business. As on 31st December 2021, there were 200 units in stock, and all these units were purchased at 50 each, 50 rupees each. So it is a beginning balance, isn't it? We have a beginning balance of 200. We have purchased that at 50 rupees each. Purchases and sales. Purchases and sales. On 1st January, purchase 400 at 55 each. On 12th January, we purchased 400 at 60 each. On 19th January, sold units 850. 30th January, purchase units 400 at 62. As on 31st January 2022, end of the month, net realizable value of stock unit is 42. Inventory is valued according to 5.4. The questions are the cost of the stock as of 31st January 2022 and value of the stock to be shown in the statement of financial position. We can calculate it quickly. The pricing method is 5.4. Pricing method is 5.4. Sorry, I haven't shared the screen. Please make these corrections. Okay, right. Question number 22. Now, at the beginning date, 1st January, brought forward balance in units 200. And during the month, we have purchased 400, 400, 400. 400 into 3, that is 1200. And we have sold 850. Therefore, closing or carried down units 200, 1200 minus 850, 550. Now we are using FIFO method. If we are using FIFO method, we issue the items that we received first, and this ending inventory, ending unit will consist of the latest prices, because if you use the FIFO method, we issue the items that we received first. Okay, so the ending inventory will consist of latest prices, so we can value based on the latest prices. The last purchase was 400 at 62, and remaining 150 purchased at the next purchase was a 60 per unit. So the cost of the stock is this. Okay, so this can be valued based on the latest prices. Lastly, we purchased 400 at 62. Before that, we purchased 150 at 60. 400 into 62, 24,800. 150 into 60, 9,000. So it is 33,800 cost. Now this is one answer. And it says net realizable value of one unit is 42. Okay, 42 multiplied by, we have 550 units. 42 multiplied by 550 units. So the net realizable value is 23,100. So the lowest value is this. Okay, we present stock in the SOSP at the lower of cost and NRV. Therefore, answer for the second part is 23,100. Okay, first part is the cost to 33,800. Second part is the lowest of these two figures, 23,100. Got it? Right. So the answer for the question number 22, 33,800, 23,100. Answer is number 4. Then question number 23. Which of the following statement is considered a change in estimate? Change in estimate. As per LKS 8. Transfer in property, plant and equipment depreciation method. Let's take it as change in property, plant and equipment depreciation method from the reduce imbalance method to straight line method. It is an estimation change. Correct. B, changing the identified carrying value of a provision based on new information. Provision is an estimation change. Change from cost model to revaluation model. For measurement after recognition of property, plant and equipment, it's a policy change, therefore wrong. Okay, it is not an estimation change, it is a policy change, therefore wrong. Change in allowance for impairment loss rate on trade receivables, estimation change. Therefore answer is, what are the estimation changes? Answer is A, B, D. A, B, D. A, B, D. Answer is number 5. Answer is number 5. Question number 24. Tarusha Public Limited Company signed Okay. C correction word is revaluation. Revaluation. Okay. From cost model to revaluation model, it is a policy change, not an estimation change. Got it? Right. So we come to the 24th one. Tarusha PLC signed an agreement on 1st October 2021 with a certain person, say customer, for sale of goods. Now that is the agreement date. On the same day, an advance of 250,000 was received from the buyer, the customer, and on 31st March 2022, the company handed over the goods to the buyer. Now look at that. At the end of the year, company handed over goods to the buyer. The remaining amount of 150,000 was received on 11th April 2022. Okay, and the question is wrong actually, not date, it should be revenue. Completely wrong. Revenue. Revenue to be recognized for the quarter, not quarter, year, ending 31st March 2022, and contractual asset or liability as on 31st March 2022. Now look at here. We have handed over, we have delivered the goods on 31st March 2022. So we can recognize the revenue. Okay, we can recognize the revenue. How much is the revenue? Earlier we received 250,000 advance, the remaining balance is 150,000. So total revenue is 250,000 advance, remaining 150 means 400,000. Therefore the answer is number 2 or 3 or 4. Then 250,000 was received in advance. Remaining 150,000 was received on 11th April 2022. That is next year. Meaning end of the year, that is receivable. Receivable is an asset. Therefore it is a contract asset. Answer is this should be liability. Okay. Third one should be liability. Therefore the answer is number 2. Answer is number 2. Correct these changes. Right, we will do these 2 questions before the break, and then we will have a break. 25th and 26th. Following information has been provided of Mayura PLC for the year ended 31st March 2022. Sales 8,500, gross profit 4,800, profit on sale of motor vehicle 350, administrative, distribution and other and finance cost 1,100, buildings revaluation surplus 800, motor vehicle revaluation deficit 320. Buildings and vehicles have been revalued for the second time in the year ending 31st March 2022. Now these assets have been revalued to the second time, and the first revaluation conducted for these assets in the year ending 31st March 2021 last year has resulted a deficit of 270,000, a surplus of 400,000 respectively. Now these are these are second time. And first time revaluation, what has happened? From the first one, buildings deficit 270 deficit, and from the motor vehicles 400 surplus. Here deficit, here surplus. The total income and total expenditure or expense, very simple. Question number 25, total income, on the other hand total expense. Total income, sales 8,500, profit on sale of motor vehicle 350, then revaluation surplus of building 800. That's it. Okay. Total expense, the main expense is cost of sales. Cost of sales. How? Sales minus gross profit. Difference between sales and gross profit 4800 is cost of sales. That is 3700. And in addition to that, we have administrative, distribution, finance and other cost 1100. 1100. And we have a motor vehicle revaluation deficit 320. Total expense 8500, 350, 800. It is 9650. Here 3700, 1100, 320, 5120. So look at the answers. It's third one. Yes, answer is third one. And question number 26, profit and other comprehensive income. Profit and other comprehensive income. Simple. On one side, we will take profit for the question number 26, profit. On the other side, OCI, other comprehensive income. Profit, sales, or we can straight away take a gross profit, that is given 4800. Other income 350 should be added. Expenses 1100 should be deducted. Okay. Now let's take revaluation adjustment. Now from the buildings, second time revaluation surplus 800, but first time revaluation deficit 270. Now second time revaluation surplus first should be first utilized for to cover the first time revaluation deficit. Okay. Now first time revaluation deficit is 270. It should have been recognized in the profit or loss as an expense. So we have to reverse it, right? If the expense is reversed, profit will go up. Therefore, we have to add 270 here. When we reverse the previous deficit, it is a reduction of expense. Therefore, profit goes up. However, the second time revaluation surplus is 800, more than this. Therefore, that additional balance, excess balance, should be recognized in OCI. 800 minus 270, it is 530, right? And then next one, motor vehicle revaluation deficit 320 second time, but first time 400 surplus. Now first we use that deficit 320 to reverse the previously recognized surplus. Now previous surplus should have been recognized in OCI. So we should reverse in the same point, same location. Therefore, previously recognized surplus is 400, but this time the revaluation deficit is only 320. So we can reverse only 320. Only 320. Okay. Second time revaluation deficit 320. First time revaluation surplus 400. We can't reverse the previously recognized surplus in full because this time deficit is just 320. So we can reverse what we have, right? So that's it. Profit and OCI. 4800, 350 minus 1100 plus 270. It's 4320. And here 530 minus 320. It's 210. Therefore, answers are question number 26, 4320 and 210. Answer is number 4. and this is the answer calculation. Right, so we have come to a break. So I'll stop for a break, and after the break we can continue, right?
Thank you for being with us during the first session of ours. As we promised you at the beginning of this session, there is a surprise awaiting you. So listen carefully and watch with 100% attention. Now we are going to play a couple of videos. The surprise we promised you is in these videos. So here we are.
Hello everyone, welcome to Achievers. Actually, you all are really lucky to join this particular program. Why am I telling you all are lucky? Because you all are going to get some exclusive scholarship to study here at Achievers. Before telling what's the scholarship that you are going to get from Achievers, or what's the benefit that you are going to get from Achievers, let me give you a small idea about Achievers. We started in 2004, 17 years back. During our journey, we were able to win several awards like Slim Brand Excellence Award, Singapore CMA Award. So these awards led us to be the best business school in South Asia for several years. And the most important thing at Achievers is, if you take most of the CEOs in Sri Lanka are students of Achievers. So what are the qualifications that we are doing here at Achievers? So let me take one by one. The first qualification that I want to tell here at Achievers, we are doing the professional qualification, which is ACCA. ACCA stands for Association of Chartered Certified Accountants. So this is a professional qualification, you know, right? CA Sri Lanka Chartered Accounting. Likewise, ACCA is the Global Chartered Accounting qualification. So if you are expecting to pursue a career in accountancy or finance, or if you are getting to a management field, or if you are getting to a business related field, obviously ACCA is going to be a very good qualification for you. One reason is it's a professional qualification. It is highly recognized all over the world. So if you ask me the recognition, obviously ACCA is recognized more than 180 countries in the world. So it's like a global passport for you. Another one advantage that you will be getting if you do ACCA, while you are doing this professional qualification, as I said to you, ACCA is a professional qualification. While you are doing this professional qualification, you can complete your academic qualification as well. That means in ACCA, there are 3 stages actually you will be learning. So what are the stages and everything? Once you start the qualification, you will get to know. Out of these 3 stages, once you're done with the first 2 stages of ACCA, you can get the BSc Honours degree from Oxford Brookes University. So this opportunity also available to you if you start the qualification, which is ACCA. So here at Achievers, especially for after A-level students, we have designed a program called Fast Track Program. So normally to complete ACCA, approximately it will take 2 years or 2.5 years. In our Fast Track Program, you can complete the entire ACCA program within 1 year and 9-month period. Normally to complete the first stage, it will take 6 months according to the normal program. But due to the fast track program, you can complete within 3 months. We have designed this program exclusively for after A-level students. So last few years also for this fast track program, we had a huge demand. We had to drop certain students because of the demand that we had. So for y'all also that option is available in this particular year. Once you are done with the A-levels, if you are expecting to do this professional qualification, world recognized global professional qualification, yes, here at Achievers the doors are open. You can come and start this qualification. Why Achievers is the best place for ACCA qualification? There is very obvious simple reason, because Achievers is the largest college for ACCA in Sri Lanka officially, and last few sessions we were able to produce the highest number of Sri Lankan and world prize winners for this ACCA qualification. So for most of the students, without a second thought, if it is ACCA, for their mind it is only Achievers. You might wonder why most of the students are choosing Achievers to do this qualification. Obviously, there are several reasons. Number one reason is our lecture panel. We have the great lecture panel, the world class number 1 lecture panel with us. Why I am telling like that? Because their past records are proving it. Our lecturers have produced 213 Sri Lankan prize winners and 24 world number 1 in professional education. And if you look at the pass rates of Achievers, it's well above the global pass rates. Why are we maintaining a very good pass rate here at Achievers? Because we are giving our attention for each and every student. So before you sit for your final exams, we'll ensure you are comprehensively ready for your final exam. So here at Achievers, we have a comprehensive program for you where you will be able to pass your exam. And apart from that, here at Achievers, we have other facilities like we have own computer center and you can use your library facility. Apart from that, these days, why most of the students are choosing Achievers, one of the main one of the important point is the online lectures that we are conducting. We are providing a comprehensive online solution for the students where even you are studying from home, you can be like in other country, you can be out of Colombo, you can be in another district, or you can be another province. No problem, you all are not required to visit Achievers. Come to Achievers physically to do your qualification, because we have an online comprehensive solution for you where you can study at home, like you can get the experience of the physical class experience, you can get it. So this option also available for you. So with this COVID restrictions, still we are doing only online classes. So once government allows us to open the physical classes, you have the option of either coming to Achievers and studying physically, or you can study online. Let's assume you can't come to a certain class due to some reason, due to some of the reason you can't come. So what you can do is during that day you can stay at home and study, because all the classrooms are hybrid classrooms. You can come to Achievers and study. If not, you can study at online also. And other important thing is if you miss a class due to certain reason, you can get the recorded video of the class. Now when we are doing classes, we will record it, so you can get the recording and you can watch it again and again. So these are the certain reasons why students are choosing Achievers. And obviously the staff and our lecturers are very friendly, so that's also another one of a main reason why most of the students are choosing Achievers to do the qualification. So at last, what's the scholarship that you are going to get? So if you are doing the ACCA qualification as displayed on the screen, you will get the scholarship. And to get this scholarship, what you have to do? A very simple thing. So I want to tell you something. If you didn't do what I am telling right now, you will regret later. So take a piece of paper and write down this number, okay, which is displayed on the screen. What you have to do is simply send a WhatsApp message for this particular number. What you have to send is your name, your school, and the qualification that you want to do, and you have to send your teacher's name. So if you send these 4 details for this particular number, your scholarship will be reserved. So to reserve the scholarship, as soon as possible, send the WhatsApp message to this particular number. After that, later on, don't regret, I couldn't take down the number. So not to have any regrets, please write down the number and send a WhatsApp message and reserve your scholarship. After your A-levels, you can come to Achievers and start your qualification. Then at last, I am wishing you all the very best for your upcoming A-level exams. So after your A-level exams, I am expecting to see you all here at Achievers. Thank you.
Achievers Lanka Business School was established in 2006, bringing together 5 leading lecturers in the SEMA industry with a vision of directly contributing to the corporate world by attracting high-caliber students and molding them to be outstanding professionals. Achievers, an approved SEMA Learning Quality Partner, is an accredited center for SEMA exams and provides facilities for classroom learning and independent and group studies. With an annual intake of 6,000 students, Achievers is a leading institute for SEMA in Sri Lanka. We attract the brightest and the best and guide them to unleash their potential. We are passionate about transforming lives and achieving aspirations. Achievers won Asia's Best Business School Leadership Award in 2010 and 2012 and a Silver Award at the Slim Brand Excellence Awards in 2012. At Achievers, we go beyond providing a mere qualification for our students. We give prominence to personality development. We provide a platform for our students to take part in activities outside the classroom so that they are well-groomed to enter the corporate world with an all-round personality. We are the first and only SEMA business school to have set up a Rotaract club and a Leo Club, both of which have prospered and gone from strength to strength in the last few years by organizing successful projects. Our students grab the future. They make a difference because success stories don't just happen. They all start somewhere. Achievers, where the good becomes great.
Hi, I'm Teshani. I was Ireland first at the 2019 A-level exam from the Commerce stream. After my A-levels, I chose to study ACCA because it's respected globally and well recognized and sought after by many employers around the world. Also, the knowledge and skills provided by ACCA are very relevant and practical to today's ever-changing business world. I'm currently studying ACCA at Achievers, and something I realized while studying at Achievers is that the lecturers are fantastic and they genuinely care about their students and help them reach their potential. Also, the classrooms are very interactive and lecturers even take time to provide one-on-one support to their students. QBR sessions and the revision classes before exams are very effective and well tailored to bring out the best in you and also increase your confidence before your exam. At Achievers, you can also get a lot of flexible options like studying part-time, full-time, or even studying online, which I think is very convenient as a student. So I would like to recommend studying ACCA at Achievers to any student who aspire to become a professional accountant.
Achievers, where the good becomes great.
මම බවන්ත දොළවත්ත මට 2019 උසස් පෙළ විභාගයේ වාණිජ්‍ය අංශයෙන් දිවයිනෙන් දෙවන ස්ථානය ලබා ගන්න හැකි වුණා. උසස් පෙළින් පසු මම ගත්ත නිවැරදි තීරණයක් වන්නේ ලෝ පිළිගත් සීමා පාඨමාලාව හැදෑරීමයි. ඉතින් මම ඒ සඳහා ඇචීවර්ස් ආයතනය සමග අත්වල බැඳගත්තා. සීමා පාඨමාලාව පටන් ගනිද්දී පොඩි චකිතයක් තිබුණා. මොකද මම පොඩි කාලේ ඉඳන් සිංහල මාධ්‍යයෙන් අධ්‍යාපන කටයුතු හැදෑරීම නිසා. නමුත් ඇචීවර්ස් ආයතනය සහ ඇචීවර්ස් ආයතනයේ ගුරු මණ්ඩලය කොච්චර හොඳද කියනවා නම් මේ වන විට මට සීමා පාඨමාලාවේ අධීර දෙකක් සම්පූර්ණ කරගන්න හැකියාව ලැබුණා. ඉතින් නංගි මල්ලි මම ඔයාලටත් කියන්නේ උසස් පෙළින් පස්සේ ඇචීවර්ස් ආයතනය සමග එකතු වෙන්න. ඇචීවර්ස් ආයතනය තමයි ACCA සහ සීමාවලට ලංකාවේ තියෙන විශාලතම ආයතනය.
Achievers, where good becomes great.
Hi, my name is Hashin Hettigara and I'm a past head prefect of Royal College and I'm currently pursuing my undergraduate degree in mechanical engineering. Having been a prefect, it was hard to manage time to do anything else. But due to the fast track course offered by Achievers, I was able to complete my ACCA knowledge within just 3 months. And this enabled me to hopefully finish my ACCA qualification within just 1 year and 9 months. And this was not just because of the effort that I should put in, but this is due to the help and support given by the lecture panel who maintain the highest pass rates and the highest number of world ranks within Sri Lanka. They offer one-to-one support or anything else that you require at any time. So if you are planning on joining ACCA or CIMA, I do recommend that you join Achievers.
Achievers, where good becomes great.
My name is Dringa Pereira and I'm currently serving duties as the Deputy Head Prefect of Sports at Royal College. So right after A-levels, I decided to study ACCA and I'm currently in the second stage now. Well, with my prefectship and work, of course, I couldn't attend classes properly. But however, I was able to study everything properly without any issue because at Achievers, there is a proper system to provide the recorded lessons to the students who miss classes. And also, even after watching the videos, if there are any issues, any doubts to be clarified, lecturers will always be there to give one-to-one support. And also, having the option of attending classes physically or online is something really great because I don't have to go to kids every day and whereas there were some certain days where I used to study at home. So all in all, I'm really glad to have chosen Achievers to study ACCA.
Achievers. Well, good becomes great.
I'm Nidula Elgirivithana, Deputy Head Prefect of Ananda College. I have chosen the path of higher studies in the field of information technology. To elevate my career growth and to extend my extra qualifications, I have decided to do ACCA at Achievers Institute. So with online classes, we don't need to attend lectures physically. We can stay at home and study. Also, the classes they provide are truly high standard, and I really enjoy the classes at Achievers online. I highly recommend Achievers for your education.
Achievers. Well, good becomes great.
Hi, I'm Shena Gunawardana, and I'm the Head Prefect of St. Joseph's College for the years 2019-2020. After completing my A-levels, I decided to join Achievers to follow up on CIMA, and I think that it was one of the best decisions I've ever made due to many reasons. They don't just teach you the syllabus content, but rather they train you and prepare you for final exams by implementing a series of mock exams. And also, despite of how many students there are in a class, they make sure that each student gets personal attention and one-to-one support. Therefore, I urge you to join Achievers to complete in your CIMA qualifications.
Achievers. Well, good becomes great.
මම තරුෂිසියන් ෆොන්සේක 2019 උසස් පෙළ විභාගයේ ගණිතාංශයේ දෙවෙනි ප්‍රථමය. ඒ 3.196ක ඉසෙට් අගයක් සමග. ඉතින් මගේ බලාපොරොත්තුව මොරටු විශ්වවිද්‍යාලයේ ඉංජිනේරු පීඨයට ඇතුළත් වෙන්න. නමුත් ඉංජිනේරුවෙක් විදිහට විතරක් නෙමෙයි මොන රැකියාව කරත් අපිට තියෙන්න ඕනේ ප්‍රධානම සුදුසුකමක් තමයි කළමනාකරණ හැකියාව. ඉතින් කළමනාකරණය පිළිබඳව ලෝකයේ පිළිගත් සුදුසුකමක් තමයි සීමා උපාධිය කියන්නේ. Achievers ආයතනයේ ලබාගෙන තියෙන World Prices, ශ්‍රී ලංකන් Prices සංඛ්‍යාවත් සමග පදනම්ම මම තීරණය කරා මට සීමා හදාරන්න තියෙන සුදුසුම ස්ථානය Achievers ආයතනය කියලා. මම ඕගොල්ලන්ටත් ආරාධනා කරනවා Achievers ආයතනයත් සමග සම්බන්ධ වෙන්න කියලා.
Achievers. Well, good becomes great.
Hi, my name is Sachindu Pereira and I'm from St. Thomas's College, Mount Lavinia. I'm 16 years old and I'm in the second stage of ACCA at Achievers. I decided to study ACCA, which is one of the highly recognized professional qualification with one of the world's first-class lecture panel at Achievers, where all the lecturers will be giving one-to-one support to all the students by conducting both the online and physical classes. And also Achievers will be providing all the facilities which are required for your studies. So I recommend all of you to join Achievers to study ACCA and CIMA, which will uplift your future career life and to become a professional teenager.
Achievers. Well, good becomes great.
Hi, I'm Sandy Mudanayaka, a 19-year-old TV presenter, voice artist, and an ACCA affiliate. I started off my ACCA right after O-levels at Achievers. Initially, I thought of ACCA as a very difficult qualification, but later realized that it is not. It is a globally recognized professional qualification that you could do right after O-levels, because I did it. I did not just participate in ACCA-related activities, but also did many other things. I was an interactor as well as a road tractor. I did my A-levels as well as started off my career as a media presenter. So you see, you just do not need to be focused in one area when you do ACCA. The best part about ACCA is the tuition provision. Achievers made ACCA very, very easy for me. They have a specific program called the Pro Teens Program, Professional Teenagers. Now this program helps us right after O-levels to understand the way of ACCA, eases us into a professional qualification. This helps us break our mindset from being normal teenagers who are just after O-levels to being teenagers who are very professional. And the best part about Achievers is that it's fun, the lecturers are awesome, and it's all in all friendly. If you are right after O-levels, confused about what you're supposed to do, I would recommend ACCA at Achievers.
Achievers. Well, good becomes great.
I think now you're aware about the surprise that we were telling you from the beginning. So what you need to do is to get registered for ACCA with Achievers and get 50% scholarship. You can WhatsApp your name, school, and the required course to the given WhatsApp number. So we will be able to get yourself registered immediately with the scholarship. And now we are at our second session of the day 2 of Nanasa accounting webinar. I invite Mr. Chaturanga Sandarwan, Senior Lecturer, University of Sri Javadanapura, to continue with the webinar. Thank you.
Right, after having the break, let's move on to the second part of the session. So we have completed 26 questions. So we have 24 questions remaining. Coming to the question number 27. It says the gross profit for the year ended 31st March 2022, 140,000. Administrative, distribution, other and finance cost 61,000. Other income 5,000. Stocks and creditors as at 31st March 2022 were 30,000 and 150,000 respectively. Stocks and creditors as at 31st March 2021 were 20,000 and 130,000 respectively. 270,000 rupees have been paid to creditors in the year ended 31st March 2022. It should be 2022. There were no cash purchases during the year, and we are required to calculate net profit ratio and inventory turnover. Right, now whenever you need to calculate a ratio, first of all you need to write down that ratio. Okay, so net profit ratio, NP ratio, is equal to net profit divided by sales multiplied by 100. Okay, then the next one is inventory turnover. Inventory turnover equals cost of sales divided by average inventory. Okay, right, so we are given the gross profit, expenses, other income, so we can easily find this net profit. Net profit can be easily found. Gross profit 140, other income 5, expenses 61. Right, you know that gross profit 140 plus other income 5 minus expenses 61, then we get what? NP, net profit. 140 plus 5 minus 61, it's 84 net profit. So we know profit is 84. And we want cost of sales. We know the beginning and ending stocks or inventory, as well as we know the beginning and ending creditors balance, and also we know the payment made to the creditors. So we can find the purchases from the creditors account. And if you know the purchases and if you know the beginning and ending stock, we can find cost of sales. So you know the path now. Okay, you know the way out, right? So first of all, I prepare a creditors control account. Creditors control account. Beginning balance coming from the credit side. 31st March 2021, it was 130,000. Ending balance carried down from the debit side. 31st March 2022, creditors balance 150. And we have paid 270 to the creditors, cash account credit, creditors account debit. Okay, so we can take the debit total, that is 420, 0 to 420 minus 130, we can get purchase value. It's 0, 9, 290. Okay, we know the purchase value. And if we know the purchase value and if you know the beginning and ending stock, we can find the cost of sales. We know cost of sales is calculated. Beginning inventory, that is given as 20, and we found the purchases 290 minus ending inventory is given as 30. Therefore net 10 should be subtracted, therefore cost of sales is 280, right? And if you know the cost of sales and if you know the gross profit, summation of cost of sales and gross profit is the sales. Okay, because you know that gross profit is equal to sales minus cost of sales. You know the gross profit 140, right? You know the cost of sales 280. So the sales is summation of these two. When this comes to the other side, it becomes positive. So 280 plus 140, 280 plus 140, sales value 420. Now we know the sales value 420, net profit is 84. Therefore, net profit percentage is 20%. And we know the cost of sales, that is 280, divide by average inventory. How do you find the average inventory? Beginning inventory 20, ending inventory 30 plus divided by 2. Okay, here 50, 50 divided by 2, 25, 280 divided by 25, it's 11.2. 11.2. Got it? So the answer for the question number 27 is, therefore 20 and 11.2, answer is number 4. Got it? Answer is number 2. Sorry, answer is number 4. Right? Now these questions are very good questions. So you can attempt these questions once again. Then 28. Which of the following statements is false regarding cost classification? First one, direct material cost is always fixed cost. No, direct material cost are always variable cost. So that is incorrect, false. B, direct cost are always a part of the cost of production. Yes, direct cost is always a part of the production cost. Correct. See, overhead cost is always period cost. No, a part of the overhead cost becomes manufacturing overhead. So manufacturing overhead costs are not period cost. Therefore wrong. Okay, not total overheads are period cost. Part of the overheads goes to the manufacturing cost. D. D. Variable cost is always direct cost. Wrong. Okay. Assume that sorry. Assume that assume that you are paying sales commission per unit, sales commissions per unit to Salesforce. Okay, sales commission per unit to Salesforce. Per unit means variable, but you pay that to the Salesforce. So it is a distribution cost. It is not a direct cost. Therefore, all variable costs are direct cost. The statement is incorrect. So we are supposed to mark the incorrect or false statements A, C, D. A, C, D. Answer is number 3. Answer is number 3. Question number 29. A manufacturing firm's information is provided below. The production department, production assembly. So there are two departments, production department and assembly department. Budgeted overhead cost is given, budgeted labor hours are given. The production overhead cost is absorbed based on direct labor basis, direct labor hour basis. Direct cost of 123,500 are required to produce 500 units of goods, where 250 direct labor hours are required from department A, 300 direct labor hours are required from department B. Profit per unit is determined as 40% of the production cost. 40% of the production cost. Cost of production per unit and selling price per unit. And if you know this, it will be 140% of the production cost, that is the selling price, because selling price is determined adding 40% of the production cost. So if you know the production cost, let's assume that the production cost is 100, so the selling price is 140. So your target, your challenge should be to find the production cost per unit. So we'll do simple, isn't it? Now for clever students, these are simple things. Okay, other students, so they should think like how to come to this level. Okay, now if you are thinking about the question, you are not managing your time well, right? You don't have time to think. So the best method of managing time is knowing the fact correctly. If you know the fact correctly, you don't waste your time. At the first instance, you write the answer. Okay, so the best method of time management is knowing the correct fact. Got it? So if you have gaps, I mean lacking areas, fill these gaps. Therefore, you should plan the rest of the time effectively and efficiently. Then you will get a good result. Okay, right. So we come to the question number 29. We are given direct cost. Direct cost is 123,500. Direct cost is direct material, direct labor, direct other. Summation is 123,500. And for this, we have to absorb manufacturing overheads. Okay, manufacturing overheads. Now there are two departments. Production department. Here A and B are given. Therefore, production department, let's assume that is A, and assembly department B. Okay, production department, let it be as A, and assembly department as B. Right, so there are anyway two departments, A and B. Now here, the overhead cost of each production departments are absorbed to the products based on direct labor hours. So I need the overhead absorption rate for each department. A and B, overhead absorption rate. Overhead absorption rate. How? Budgeted overhead divided by budgeted direct labor hours. Here also budgeted overheads of that department divided by budgeted direct labor hours. Okay, the budgeted overhead of department A or production 250,000. 250,000. And budgeted direct labor hours of the department is 5,000. Right? Therefore, overhead absorption rate is 250 divided by 5, it's 50 per direct labor hour. And in the department B or assembly department, the budgeted overhead cost is 240,000. Budgeted direct labor hours 3,000. Correct? 3,000. So overhead cost per direct labor hour is 80 per direct labor hour. This is also per direct labor hour. Now we know the overhead absorption rate for each production department. For A, 50 per direct labor hour, for B, 80 per direct labor hour. Got it? So based on that, we can absorb overheads, right? So we know that for this for this 500 unit batch, they have spent 250 direct labor hours from department A. 250 hours, that into overhead absorption rate is 50 per hour. 250 hours have been used to produce 500 units of the finished good. Hourly overhead absorption rate is 50, so multiply, you can get the absorbed overhead. Here the number of hours spent by the department B is 300. Hourly rate is 80, so you can take the cost, overhead cost absorbed. 250 multiplied by 50, it is 12,500. 300 multiplied by 80, it is 24,000. So total manufacturing cost, okay, or production cost is 123.5, 12.5, 24, it's 160,000. But we are supposed to write the unit production cost. Okay, now these costs have been incurred to produce 500 units. So if I divide that 160,000 by 500 units, we get 320 per unit. And if we know the unit cost, we can find the selling price. How? 320 manufacturing cost or production cost per unit, and we keep 40% profit, 40% profit on the production cost. So selling price is 100 over 140, or you can take 40% and add 40% to the 320. Okay, straight away I took 140%. That into 140%, 448. So one answer is this one and the other answer is this one. Got it? These are the answers. Right. So answers are 320 and 448. Therefore, the answer is number 2. Question number 30. Following information is given for a unit at the level of 8,000 units. Now this is per unit. Selling price 700, direct material 300, direct labor 200, production overhead 300. And per unit cost has been given at the level of 8,000 units. Okay. All direct costs are variable. So we have two direct costs, 300 and 200. So this is variable cost. And 75% of the production overhead costs are fixed. Of this, 75% fixed, and therefore remaining 25% is what? Variable. The fixed cost and break-even point. Fixed cost and break-even point in units. Very simple. Okay. So we want to calculate the variable cost and fixed cost. Selling price is known as 700. We want variable cost. So far we know variable cost, direct material 300, direct labor 200, and we want another part from the manufacturing overheads or production overheads. Now you have to take the total production overhead. Okay, total production overhead. How? That 300 has been given by dividing the total production overhead by 8,000 units, right? So total production overhead can be calculated per unit 300, that into 8,000 units. So it is 0.8 into 3, 24. Okay, 2.4 million total production overhead. Of this, 70% are fixed, and therefore remaining 20% is variable. 75% means 3/4. Therefore it is 1.8 million. 25% means 1/4. So therefore it is 600,000. Now we know the fixed cost. Now we found one answer, 1.8 million. And here 600,000 variable cost is total variable cost from the production overhead. So if I divide this by 8,000 once again, 600,000 divided by 8,000 once again, we get 75 per unit. 75 per unit. Okay, 75 is what? The production overhead variable component. So add it here. 300 direct material, 200 direct labor, and manufacturing overheads or production overhead. We found the amount variable cost 75. So total variable cost per unit 575, and we know the fixed cost. So the next question is break even point in units. Very simple. Fixed cost divided by contribution per unit. Okay, fixed cost is known as 1.8 million. Contribution is what? Selling price minus variable cost. Selling price is 700. Variable cost is 575. Therefore 1.8 million divided by contribution is selling price minus variable cost. It is 125. Therefore 14,400 break even point units. This is the other answer. Okay, sometimes you might have you might not learned the cost volume profit analysis lesson. Okay, but just note down the answer, and once you learn it, just do the question once again and look at the answer. Okay, this is the answer. Therefore answer for the question is fixed cost 1.8 million, break even point in units 14,400. Answer is number 1, isn't it? Number 1. Question number 31. Now actually we have done 30 questions. Those are MCQ questions, and from 31 to 50 short-ended or open-ended questions. Right, 31. Indicate whether the following statements are true or false. A cost center is a cost accumulation place. A cost center is a cost accumulation, cost collection place, person, equipment, or an activity. Yes, correct. True. Costs that can be directly identified with the cost unit are called as manufacturing cost. No. Are called as direct cost, not manufacturing cost. Okay, this is wrong. Third one, for valuation of inventory, costs are classified as manufacturing and non-manufacturing. Yes, correct. To value inventory, we classify cost as manufacturing and non-manufacturing. To control cost, categorize cost into relevant cost and irrelevant cost. No, that is for the decision making. Relevant, irrelevant classification applicable for decision making. So that is incorrect. TF 32. Mention the document used for each of the following situations. Document. Recording of receipt of raw materials into warehouse. Good received note. GRN. Okay. Recording of receipt of raw materials into warehouse. We receive raw materials ordered. Therefore, the relevant document is good received note. To record information about work done by an employee in a day, time spent and salary rates for those works. Time sheets, daily time sheets, daily time sheets. Because in a day, if it is in a week, weekly time sheet. You know that time sheets are prepared daily or weekly. So here specifically it says in a day. Therefore, this should be daily time sheet. Making payment for stock supplied by a supplier. Very simple. Payment voucher. Payment voucher. Number 4. Material requisition to production department. That's what? Material requisition note. MRN. Material requisition note. MRN. Okay, 33. Write journal entries to record following transactions, not data, transactions. Deduction of 15,000 from salary advance. Deduction of 15,000 of salary advance. Now you know that if you have learned the labor costing lesson, you know all deductions are debited to where? All deductions are debited to salary control account. Therefore, the double entry is salary, or you can say wages, control account debit 15,000, salary advance account credit. Salary advance account credit 15,000. B. A deficit of 400,000 in the first time revaluation of building. Deficit in the first time. Therefore, profit and loss account debit 400,000, or else you can say other expense, doesn't matter. Buildings account credit. Buildings account credit 400,000. Profit and loss account debit 400,000. Buildings account credit 400,000. Very simple. Question number 34. Indicate how the net effect of following calculations is represented in the accounting equation. Rupees 100,000 out to a creditor, owner pay in with own money subject to 5% discount. Now this means there is a balance payable to a creditor 120,000. It has been paid by the owner from his personal cash under 5% discount. So what happens? Creditor is settled. Therefore, liability is reduced by 120. And when we pay this, we have received 5% discount. 5% is how much? 120 into 10%, 12. 5% means half of that. Therefore, 6. Because of the discount received, equity increase. And remaining 114 usually paid by the business. But this time, that 114 balance amount has been paid by the owner from his personal money. From the business's point of view, it is payable to the owner. Therefore, his equity increases by 114. Got it? 114. Second one, a worker's compensation case provision made for 700,000. Already reducing to 610,000. This means there was a provision for compensation 700,000. It has been made already in the financial statements, but it has been reduced to 610,000. So it is a reduction of provision. You know, Pute, always provision is a liability account. So having a credit balance, to reduce that provision account debit, right? Therefore, liability debit, or liability rather decrease by 90. Okay, liability decrease. Provision is on one side liability, other side expense, right? When you provide it originally, provision liability account credit, expense account debit. Okay, now we have reduced the provision. Reduction of provision means, on the other hand, reduction of expense. Reduction of expense means increase in equity. Increase in equity. Okay, when you make a provision, liability increases, equity decreases as it is an expense. But when you reverse the provision, liability decrease, equity increases because it is a reduction of expense. 35. Classification of asset as current and non-current. Actually, question is not there. You need to write the relevant accounting concept. Write the accounting concept. Write the concept, accounting concept. Classification of assets as current and non-current in the statement of financial position, going concern. Going concern. Number 2, depreciation of property, plant and equipment is recognized as an expense against income during the period. Yes, we recognize depreciation expense against the income because of what? Matching concept. Number 3, continuously using first in first out method for valuing stock. Consistency. Presentation of a financial period above the financial statements. Financial period is shown. Why? Periodicity concept. Question number 36. According to the conceptual framework of financial reporting, state the 3 conditions that must be fulfilled to recognize a liability. 3 conditions. Comply to the definition. You need to comply to the definition. And provision of relevant information. And provision of faith, provision of information, faith, wait. Faithful representation of information. Faithful representation of information. Now to recognize this is applicable even to assets, Lamai. Okay, now here the question is asking about the liabilities, but this is applicable to asset as well. To recognize elements, okay, in financial statements, these 3 conditions or criteria should be satisfied. One is, what is the first one? Comply to the definition. Number 2, provision of relevant information. Number 3, faithful representation of information. 37. On 1st October 2021, Ranga company purchased a machine with a marked price. Now earlier also I told you marked price means list price. List price of 800,000 subject to a trade discount of 10%. There 108,000 was incurred as VAT and 72,000 as installation cost. Rupees 75,000 has been incurred for training employees. Look at that, training employees for this machine. It was estimated that the machine can be used for 5 years, and after the useful life it can be sold for 550,000. The company is not registered for VAT. Not registered for VAT. You may underline the phrase. Not registered for VAT. Right? In that case, the VAT cannot be refundable. So it is a it cannot be refundable. Therefore, it is a non-refundable tax. Cost to identify the machine. Cost of the machine. and depreciation expense for the year ended 31st March 2022. Okay, let's do that. Question number 37. Now, if you look at the date carefully, we have purchased the machine at the beginning of the year, 1st October 2021. Usually our year ends on 31st March 2022, starts on 1st April 2021. We have purchased the machine right at the middle. Okay, right at the middle, right? So we have 6 months here, 6 months here. So we have to depreciate 6 months. So first we want to calculate cost. List price is 800, and when we purchase we have received 10% discount, so it is 80 reduction, and this company is not registered for VAT, therefore VAT paid 108 cannot be refundable, so non-refundable taxes are part of the cost. So VAT 108 and installation 72, and we can't add employee training expenses. Sorry, you can write it down. Right, so we have purchased the machine right at the middle, so we have 6 months to go until the end of the year. First question is cost. List price is 800 minus trade discount 80. Non-refundable taxes should be added to the cost. So in this case VAT 108 because the business is not registered for VAT, and to install this 72 we can't add, we can't capitalize employee training expenses. Therefore cost of the asset is 800 minus 80 plus 108 plus 72, it's 900. And second part, depreciation. Cost is 900, residual value are we given? Yes, residual value 550 divided by useful life 5 years. 900 minus 550, depreciable amount is 350. 350 divided by useful life 5, 70 per year. But for this particular year only 6 months are there. Therefore 6 months means half of the year, 12 upon 6, that is 35. First answer is this, second answer is this. Question number 38. State whether the following statements are true or false according to the SLFRS 16 leasing standard. SLFRS 16. After the lease liability is recognized, the lease liability must be reduced due to interest. No, due to interest, lease liability should be increased, not reduced. Therefore, this is incorrect, false. Okay, due to interest pote, liability will be increased. That's why we credit the lease interest to the lease liability account. Number 2, when recognizing right of use asset, it should be measured at cost. Yes, at the recognition, right of use asset should be recognized at cost, measured at cost. Upon entering into a lease, the lessee acquires legal ownership of the asset. No, we don't acquire the legal ownership. We get only right of use. Therefore, this is false. Last one, right to use an asset can be revalued at a later date. Yes, we can revalue a right of use asset. After the initial recognition, we can revalue it. Question number 39. Now answer for 38. FT. 39. Board of Directors has approved to publish the financial statement for the year ended 31st March 2022 on 5th August 2022. Okay, this year financial statements have been authorized by the directors on 5th August 2022. Indicate whether the following events are adjusted or non-adjusted. Events according to the SLFRS 10. the value of the asset that was purchased on 1st April 2022. Now look at that date. The date of purchase is 1st April 2022. Next year beginning date, right? So there is no evidence as of the reporting date. So it was purchased on 1st April 2022 next year and determined as 2.5 million on 10th April 2022. So it is non-adjusting. The reason is we purchased the asset in the next year. So at the reporting date, there were no evidence. Therefore, non-adjusting. Number 2, stock worth rupees 800,000 as at 31st March 2022. As at 31st March 2022 was sold for 710,000, a reduced amount, on 5th April 2022. It provides an evidence as to how much of net realizable value was there as at 31st March 2022. Therefore, this is adjusting. Number 3, an ordinary share issue made on 4th April 2022. It's a subsequent share issue transaction, non-adjusting. The court has given a decision on 18th June 2022. Okay, hope now I am audible. Am I audible? Yes, great. Now I think these 4 events are clear. The last one, if I tell once again, at the reporting date, the case has been filed. So there was an evidence. And after the reporting date, but prior to the authorization date, it was finalized by the court. So it is an adjusting event. Got it? 40th question, indicate whether the following is a provision, contingent asset or contingent liability as per the LKS 37. Not inability, it should be liability. Okay, liability, both are not good anyway. Inability not good, liability not good, right? Okay, don't accumulate these things more than required. Liability is more than required, inability is not at all. Okay, liability is to estimate cost of the repair reliably. Let's take it like this, estimated cost for the repair reliably related to the sale of goods under warranty. So reliable estimation can be made by looking at the sentence. There are errors, but if you looking at the sentence, it says that there is a warranty obligation. The amount required to repair the goods sold under warranty can be estimated reliably. Therefore, provision. provision. An ongoing compensation case proceedings in a court against to the business. It is ongoing. Still the decision has not been taken or given. So it is contingent liability. Contingent liability. Because it is a possible obligation, right? Third one, reliable or reliably estimate the cost for the cleaning to keep the environment around the business. This is done on voluntary basis as a business policy. So as a business policy, therefore this is a constructive obligation. Now due to a constructive obligation, a present obligation can be arisen. Okay, and reliable estimation can be made. Therefore this is a provision. Number 4, estimate for the income tax according to the Income Tax Act. Yes, provision. Why? As per the Income Tax Act. Therefore this is a legal obligation. Because of the legal obligation, present obligation arises. Okay, so we can make a provision. We should make a provision rather. Right. 41. A business is given the following information: direct labor cost 600, production cost 1880. Okay, direct labor cost 600, production cost 1880. If manufacturing overhead cost is assumed to be 60% of the direct material cost, if the direct material cost is 100%, say for example 60% is overhead, manufacturing overhead, then direct material cost is very interesting question, short but sweet, isn't it? Short and sweet. You know the composition of the cost in a manufacturing firm. We are in the question number 41. Composition of the manufacturing cost: direct material plus direct labor plus direct other plus manufacturing overheads equal manufacturing cost or production cost. Okay, this is the composition of the manufacturing cost. So let's substitute known figures. Direct labor cost 600. Okay, we want to find this one. Let it be X. And we are not given direct other. In a case like that, we assume that is 0. And we don't know manufacturing overhead, but it says that manufacturing overhead cost is 60% of direct material cost, right? 60% of direct material cost. If the direct material cost is 1x, this is 0.6x, isn't it? If the direct material cost is 1x, here 1x, therefore manufacturing overhead is 60% means 0.6x. And we know the manufacturing cost 1880. So only one unknown variable, that is x. So you can solve this and find x, that is direct material cost. Okay, so summation of these two here, 1 plus 0.6, 1.6x equal, this can be transferred to the other side, therefore 1880 minus 600. So here 1280 x equals, this can be transferred to the other side, then it is a division 1.6. Then x is 1280 divided by 1.6, 800. Direct material cost is 800. Got it? Then 42. Pushpika left from Malit, Pushpika and Akila partnership on 31st March 2022, end of the year. And as at 1st April 2021, his capital and current account balances were 780 and 125 respectively. Now he left the firm or partnership end of the year, but these balances are given at the beginning. There were no other conditions in the partnership agreement except sharing profits in the ratio of 2:1 respectively. That was the only clause in the partnership agreement. On 31st March 2022, end of the year, rupees 500,000 was paid to settle a part of the pushpicker's equity and the balance was transferred to a loan account. Okay, we have made a cash payment of 500, balance has been transferred to the loan account. Got it? This loan should be settled on 31st March 2023, 2 years later. Not 2 years, 1 year later. Should be settled on 31st March 2023. The profit for the year ended 31st March 2022 was 900,000. Malit and Akila decided to continue the business by sharing profits or losses in the ratio of 3:2. No drawings were made during the year. Pushpicker's loan account balance as at 31st March 2022. Interest to be paid on Pushpicker's loan balance for the year ending 31st March 2023, next year. Okay, we can prepare the capital account and current account of Pushpicker. And we don't know the balances of other two, right? So this is question number 42. Okay, so I prepare capital account of Pushpicker. Capital account Pushpicker. Then current account Pushpicker. And we are given the beginning balances. Capital account 780, brought forward balance 780. Current account balance brought forward, how much? It's 125. So these are beginning balances. Now if you plan the question, year starts on 1st April 2021, ends on 31st March 2022. There were 3 partners. Let them sorry. Capital account credit balance 780, current account credit balance 125. Okay, so this is the financial year, right? So there were 3 partners. Let them be in their initials MPA. MPA, and P retired or left the partnership on this date, but P was there for the entire period during this year. Okay, therefore to distribute the profit, the applicable agreement is old agreement, because P, Pushpicker, retired or left the partnership end of the year. Got it? So we want the profit to be distributed. Okay, profit distribution. And net profit is given as 900. Okay, now as per the previous agreement or old agreement, no clauses except sharing profits in the ratio of 2:1. So very simple, this can be shared, profit shares. 3 partners MPA, right? The profit sharing ratio is 2:1. 2 to 1. Total is 5. So 900 divided by 5, we get 180. 900 divided by 5, yes, 180 per share profit. So here 180, here 360, here 360. So 900, after that profit has been completely distributed. But we are preparing the Pushpicker's account, so we don't want other two, right? So Pushpicker's account should be credited, current account should be credited 360. This is profit share. Profit share. Okay, now we found the current account balance as of this date of Pushpicker at the date of retirement. Okay, now that should be transferred to the Pushpika's capital account because he's going to leave the business, leave the organization. 485. So should be transferred to the capital account 485. Right? Okay. So current account debit, capital account credit coming from the current account of Pushpika 485. And in this question, no goodwill adjustment is given. Meaning the goodwill, one reason is there is no goodwill. Number two is there is goodwill, but it has been already recorded at the correct amount. Okay. One reason for not giving the goodwill information, there is no goodwill. The other one is, yes, there is a goodwill, but it has been recorded at the correct amount. No need to adjust it. Okay. So, no goodwill adjustment. So, total equity to be settled to P is 5, 6, 12, 1265. Okay, but at the retirement we have paid in cash 500. So remaining balance goes to loan account. That is the requirement. It's 765. That is the answer for the first part. 765. First part, loan balance is 765. Now this should be settled. This should be payable on 31st March 2023, 1 year later. Retired on this date, should be settled 1 year later. Now this year we don't pay interest because he retired on the last day, but next year we have to pay interest. That is the requirement. In the second part, it requires to calculate interest to be payable in the next year. Okay, next year 765 as per the section 42 we have to pay 5% interest. 765 into 5% interest, it's 38.25, because next year ending date this will be settled. So until then we have to pay interest. As per section 42 we have to pay 5% interest. So that is the answer. Question number 43. The equity of Neville PLC as on 31st March 2021, that is the beginning date, was as follows. Stated capital 300,000 shares, value is 6 million. Retained earnings value is 3.65 millions. On 1st April 2021, beginning of the year, applications were invited for issue 200,000 shares. It is a new share issue. So they have invited applications or applicants rather for 200,000 shares at 25 rupees per share. As of 15th July 2021, applications for 275,000 shares were received with cash. Now excess applications. Excess shares were rejected and paid for the rejected shares, and remaining shares were allotted proportionately on 1st September 2021. Profit for the year ended 31st March 2022, 850. Dividends for ordinary shareholders, interim dividends 120,000. We know that we don't record proposed dividends. Why it is given? To cheat you, to mislead you. Okay, if you are a clever one, you don't get misled. Okay, proposed dividends are not accounted. Only the interim dividends or the paid dividends are accounted. So what are the requirements? Stated capital and retained earnings as at 31st March 2022. Very simple. Question number 43. We can prepare two columns, stated capital and retained earnings. Brought forward balances 6,000, 3,650. Okay, so there is a share issue. This is a public issue, isn't it? Now we want to issue 200,000 shares, but we have received 275,000 applications in excess, right? But we have rejected the excess. So ultimately what is left over, the number of shares that we want to issue. Okay, share value is 25, very simple. So share issue value is 200,000 shares at 25. Okay, in thousands, 5,000. So on one hand, cash increases in the company, on the other hand, stated capital increases, right? No impact to the retained earnings. Yes, if there are preference shareholders, the story is different. But here we don't have preference shareholders. Okay, we don't have preference shareholders. Therefore, proposed dividend for ordinary shareholders are not accounted. Right, then profit for the year, very simple. Profit for the year is 850, should be added to the retained earnings. And from dividends, we write or we record interim dividends only. Interim dividends. So when we pay interim dividends, the retained earnings will be reduced by 120. So we can take the closing balances here 11,000, here 3,650 plus 850 minus 120, 4,380. Sorry. This is the answer. We have beginning balances, share issue. What happens? We are issuing 200,000 shares. That's true that we have received an excess, but we have rejected by paying the cash. So what is ultimately left is the number of shares that we are issuing. 200,000 into 25. And profit for the year 850, that will be added to the retained earnings. Okay. From the dividends, we record only interim dividends. Because of the interim dividends, retained earnings will be reduced by 120. So we can take the closing balances. Right, question number 44. Current ratio is 2.5:1. Current liabilities are 400,000. Inventory and advance expenses. Advance means here advance means prepaid. Prepaid expenses are 60,000 and 60,000 and 8,000 respectively. Quick asset ratio, very simple. Okay, what happens? Right, I'll take a fresh page. Okay, let's erase this. Right. We are given the current ratio. Current ratio 2.5:1. Okay. This is current asset. This is current liability. We know the current liability 400,000. If so, current asset is 400,000 multiplied by 2.5. 400,000 multiplied by 2.5. It is 1 million. Okay, 1 million. Now the question is quick asset ratio. Let's say quick ratio. How? Current asset minus inventory minus prepayments. Let me take it as a fraction, divide by current liabilities. So we can substitute. Current asset is now found as 1 million. Inventory is given in the question 60,000. Prepayment is 8,000. Current liability is 400,000. Solve this. 1 million minus 68,000 altogether divided by 400,000. It's 2.33. 2.33. Right? So we come to the 45th question. In the year ended 31st March 2022, indicate whether the debt to equity ratio of the business will increase, decrease, or remain in the same due to one of the following transactions. Now, first one, payment of loan interest. First of all, you need to write the equation or formula. Debt to equity is equal debt capital divided by equity capital. Okay, debt capital divided by equity capital. Now, payment of loan interest, because of the interest expense, profit decreases. If the profit decreases, equity decreases. If the equity decreases, that is the denominator in this formula. Therefore, the ratio will be increased. Okay, interest is an expense. Because of that profit decrease, if the profit decrease, equity decrease, therefore this ratio will be decreased. Issuance of shares. If you issue shares, equity increase directly, like that earlier question. So equity increase, that is the denominator. If the denominator increase, the ratio comes down. Loan repayment. If you repay the loan, the debt capital reduces. Debt capital reduces. Numerator reduces. If the numerator reduces, the ratio comes down. Selling an item of property, plant and equipment at a profit. If you sell a PPE item at a profit, it is a profit. So profit increase, equity increase, denominator increase, therefore ratio decrease. Increase, decrease, decrease, decrease. Then 46. Identify following cash flows as operating, investing or financing according to the LK7 cash flow statement. Receiving dividends on shares from another company. Receiving dividends. Dividend received because of an investment made in another company. Investment activity. Payment for suppliers. Very simple. Operating. Initial expenses paid by the lessee. Initial expense paid by the lessee. That is initial direct cost. Therefore, investment. Proceed from sale of machinery. Fixed asset sale. Again, investment. (47) A business produces 10,000 units per quarter. 10,000 units per quarter. How many quarters in a year? 4 quarters, isn't it? There are 4 quarters in the year. A finished unit requires 2 units of materials. Now this is finished units, finished good. Okay, for a quarter they sell or rather they produces 10,000 finished goods. To produce one finished good, it requires 2 units of materials. And ordering cost per order is 5,000. Holding cost per unit is 4% of the purchase cost per unit. Purchase cost is 200. So if we know the purchase cost as 200, of that 4% is holding cost. That is 4 into 2, 8. That is what? Holding cost. So we know the ordering cost, we know the holding cost. What are the requirement? Economic order quantity, number of orders to be placed in the year according to the economic order quantity. Very simple. Question number 47. Economic order quantity is equal to 2D multiplied by CO divided by CH. Right, 2 is a constant, D is annual demand. That is the thing that we want to find. Okay. For a quarter, we produce 10,000 finished goods. Okay. For a year, we want 40,000 finished goods. But we are calculating the economic order quantity for the material. Okay. This is finished good. So to finish one unit of finished good, it requires two materials. Therefore, the demand is for the material 10,000 multiplied by 4 quarters into 2, it's 80,000. And cost per order is 5,000. And we found the holding cost as 8 rupees. How? Purchase cost is 200, that into 4%. You take the square root. 2 into 80,000 into 5,000 divided by 8 square root. It's 10,000 units. That is economic order quantity. Part number 2, number of orders in a year. How? Demand divided by reorder quantity. Annual demand is 80,000 units of direct material. Reorder quantity, in this case, we order 10,000 at a time. Therefore, reorder quantity is economic order quantity 10,000. So we want to order 8 times. 8 times. Okay. 48. Given the following budgeted information of a good manufactured by a firm. Direct labor hours per unit 5, number of production units 24,000, budgeted manufacturing overhead cost 1,440,000. The production overhead costs are absorbed on direct labor hour basis. Now absorption basis is direct labor hours. Right, direct labor hours. 25,000 units of products were produced during the year or during the period where 4 direct labor hours were spent per unit. The actual manufacturing overhead cost is 1,315,000. Requirement is overhead cost absorption rate and absorbed overhead cost. Simple. If you have learned the overhead costing, sorry. Question number 48. First one is overhead cost absorption rate. Overhead absorption rate is equal to budgeted overhead divided by budgeted direct labor hours. In this case, budgeted overhead cost is known 1,440,000. Budgeted direct labor hours can be found per unit 5 hours are required. We expect to produce 24,000 units. Okay, 5 into 24,000 units, it's 120,000. 1,440,000 divided by 120,000, it's rupees 12 per direct labor hour. 12 per direct labor hour. Got it? So that is the first part. Second one, let me take it here. absorbed overhead, absorbed overhead equals overhead absorption rate multiplied by direct labor hours used. Now we know the overhead absorption rate is 12 per hour. Now it says in the below, to produce 1 unit, the labor hours, 4 labor hours are required. 4 labor hours for 1 unit. Now during the period we have produced 25,000 of finished goods. Okay. So we can take the figure straight away. 12 multiplied by 4 multiplied by 25,000, it is 1.2 million. That is the absorbed overhead. Question number 49. The selling price of a unit is 1,500. The total variable cost, look at that, total variable cost of selling 8,000 units in a year is 7.2 million. Annual fixed cost is 5,520,000. Break even sales value, look at that, break even sales value. And safety of margin unit, margin of safety units. This should come here, this should come here. Margin of safety units. Okay. (49). We have one more question to discuss. Selling price knows 1,500 and we can find the variable cost per unit. How? Total variable cost is 7.2 million, that is for 8,000 units, isn't it? Yes. So 7.2 million divided by 8,000, we get 900 variable cost per unit, and we know the fixed cost 5,520,000. So the first question is break even point rupee value. How? Fixed cost divided by contribution per unit, break even point units, and if you multiply this by selling price, you get the value. Fixed cost is 5,520,000. Contribution, we know that selling price minus variable cost, 1,500 minus 900. Selling price is 1,500. Solid. You can simplify further. 5,520,000. Contribution is 600, isn't it? Multiplied by 1,500. So the answer is 5,520,000 divided by 600 multiplied by 1,500. It is 13,800,000. 13,800,000. Okay, we come to the last question. No, we have safety margin. Part 2, margin of safety. Margin of safety units. Expected units minus break even point units. Now they expect to sell 8,000 units. That is their expectation. See, expect to sell 8,000. We want to find break even point units. We know that fixed cost divided by contribution. Okay, shall I take it here? Fixed cost is 5,520,000 divided by contribution 600. 5,520,000 divided by 600, we get 9,200. Now if you have studied this lesson, you will understand margin of safety happens when the expected units are greater than the break-even units. Okay, expected units are greater than the break-even units. But in this case, In this case, break even, I mean, expected units are less than the break even units. It doesn't exceed the break even units. Therefore, no margin of safety. Don't write minus answer. There is no margin of safety. Got it? Right? You might have learned this lesson. If so, you know that when the break even point exceeds, the excess is called as margin of safety. In this case, there is no excess because expected units are less than the break even point units. Therefore, no margin of safety. Don't write minus 1200. Got it? Last one. A business is considering investing in a machine. A feasibility study has already been done. That is important. Already been done. Already been done. For this purpose, by paying 15,000, this is not relevant because this is what? Sunk cost. Already incurred. Not relevant. In the information received, the list price, look at that, list price of the machine is 5,000 or 5 million rather. And the trade discount is 10%. It is necessary to pay 180,000 to install the machine. Okay, installation. At the end of the project period of 5 years, scrap value of the machine is 1,500. Expected to generate annual net operating profit. Annual net operating profit 1,200 each year. Machine is depreciated straight line. Initial cash flow payback period. Very simple. 50. First part is initial cash flow. Now list price of the machine is 5,000. List price is 5,000. And trade discount 10%, isn't it? 10%. So it is 500 reduction. And to installation, we incurred or we want to incur 180. That's it. Okay, don't take that feasibility study cost because that is already incurred. That is a sunk cost. Sunk cost is not a cash flow. I mean relevant cash flow. So the initial cash flow is 5,000 minus 500 plus 180. It is 4,680. Okay. The second one is payback period. Payback. Now to find the payback, we want annual cash flows, right? But we are given annual profit, right? Cash flow is equal profit. Now from the profit, we have subtracted the depreciation. Okay, from the profit, we have subtracted the depreciation. So if we add depreciation back to the profit, we get cash flow. Now annual operating profit is 1,200. So we can find the depreciation annually. Cost of the machine is 4,680 and its residual value is given as 1,500. So the depreciable value can be taken, useful life 5 years. So it is 636 a year. 636. 636. Summation of this 1,836 what? Cash flow. So to find the payback period, you might have learned we can find accumulated cash flows or cumulative rather cash flows. Accumulative or cumulative, right? Year 0, year 1, year 2, year 3, year 4 and year 5. Year 0 cash outflow is 4,680. Now we want to get the accumulated or cumulative cash flow. Cumulative means like this. Say 0, 1, 2, 3, 4, 5. Cumulative means here cumulative this only. Next year cumulative this 2. Next year these 2. or these 3, and these 4, these 5, these 6 cumulative. Okay, so here in the very first instance, therefore cash outflow. Year 1 means 0 and 1 minus 4,680 plus next year cash flow is 1,836. 1,836. It is 2,844 minus, right? Minus 4,680 plus 1,836 cash flow. Okay, and year 2 cumulative means year 2 0, 1, 2. You can take all 3 years, or else you can take this is the cumulative of 0 and 1. So you can add the next cash flow to 1 because this is cumulative up to that point. Therefore, minus 2,844 plus next year cash flow 1,836. It is 1,008 is still negative. Okay. So next year cumulative, year 3, 0, 1, 2, 3. So up to 2 is here. Therefore, minus 1,008 plus next year 1,836. It is 828 plus. When it becomes plus or positive, you stop calculating the remaining values. Therefore, the payback period. Now, what is the meaning of payback period? The meaning of payback period is time taken to recover the initial investment. Okay, time taken to recover the or cover the initial investment, right? So when it is positive, you can stop calculation. So full years 2 years, and after second year still we need 1,008. So we can find months. How? After second year still we need 1,008 cash flow. The next year cash flow is 1,836. We want to find the months, therefore multiply this by 12. 1,008 divided by 1,836 multiplied by 12, it's approximately 6. So payback period is 2 years and 6 months. Meaning of that is in 2 years and 6 months approximately the initial investment will be covered. Okay, so we have come to the end. I don't know whether you have got something out of this. Some lessons might or yet to be finished. Maybe, I don't know. So hope that you have understood something from this paper. Okay. Right. So now it's closer to midnight. I am also sleepy. And do your level best and utilize the remaining time effectively and efficiently. Right. Plan for the future. Then your dreams will be realized. Okay. Don't give up anything, because if you give up something, it will be a passion. So you will be giving up everything, right? So the target is getting through the exam very well, and that will be the pleasure to your parents. Okay, that's how you can give a fair return to your parents' effort, financial resources, money spent on you, right? Therefore, give a fair return to the investment made by your parents. Okay, so with that note, I'm going to conclude the session and hope that you can get a very good grade for the subject as well as other 2 subjects. And if you are lucky enough to come to our university, I am in the University of Sri Jayawardenepura, Department of Accounting. So if you happen to come to the university, you can meet me in a future date. Okay, let me wish you all the best, and it's closer to midnight. Therefore, good night everyone, and bye.